All right. Good morning, everybody. Good morning, good morning, good morning, good morning. What's going on, everybody? Let me know where you're watching from in the chat. Good morning. Starting at the top here, we got Raxith. Good morning, Raxith. Good morning, Thor. Morning, TG. What's up, Pocket? Pocket Aces. Good morning. Drez, good morning. Pack Trades. Mr. Cody, good morning. Scotty, good morning. Mr. H with the Pack Trade Group profile picture. Good morning. Good morning. Alpha Bravo, good morning. Too late already. Yeah, I like getting pretty creative with the polls, as you guys can tell. Pineapple Pete. Oh my. Julie, we got to talk. We got to back test this strategy because it's not profitable. That we got to get some more data on that. Oh my God, Julie. Morning, Tony. Good morning, good morning, good morning. Hey guys, real quick, if while we're starting up here, if you guys could just take 2 seconds, like the stream, and then go on over. If you do have a Twitter, go on over to the Twitter page. I can drop the link here in the chat. And if you guys want to help share the stream, get it out there to as many people as possible. Here is the analysis for the morning. Just posted the link in the live chat. Let's get into a little bit of analysis. Good morning, Mickey. How you doing this morning?
Hey, man. How you doing? Doing good. How's your weekend?
Dude, it was not long enough this weekend. This weekend was back to back to back to back to back to back to back something.
Dude, for real. Like, I already started with, like, fall activities. Like, got the fall stuff down, the Halloween stuff down, ready to go. Just always, like, me and my family, we had this agreement, right? Like, where you have to deep clean the house. Like, kind of like spring cleaning. But we do it in the fall. Like, before I put any holiday decorations up, right? Like, the house has got to get spotless. And, like, right, that's what we do. So we got that ready. And then We went our first fall festival this weekend, so it was pretty fun.
I love fall, dude. It's my favorite. It's my favorite season of the year.
I'm
Football
Bulldog.
season. I
Yep.
don't sweat when I go outside. Feels great. I love it.
Yeah, my Bulldogs love fall. Like, they won't even come inside now. They barely go outside in the wintertime or in the summertime, but the first leaf drops, they're out there all day. They'll be out there all day just chasing frogs and lizards and stuff like that. But yeah.
We got the first legit question of the day here. This needs to be answered. Did the autumn markets already start? Did we get the autumn price action in yet? I don't know. We'll see. Morning, Orlando. Landy, good morning. All right, so I'll get into a little bit of what I see, and then I'll pass the mic off to Mickey here, and we'll kind of do a little bit of wargaming this morning before market opens. So one thing that I'm looking at that you guys, if you were watching on my screen, I just already removed it, but it was this bearish footprint. Now, if you're just watching or if you're watching the replay, you're like, what the heck is a bearish footprint? So all I do is starting at 8 a.m., whenever we're above or below midnight open, and obviously the statistics we have for the day, in this case, the opening price is P12 mid, out of stat low of day, whatever direction we're overextended on within the overall statistical direction we typically will go to and retrace to. I want to find the footprint that potentially will give us a little bit of context into when that mean reversion is going to take place. So starting at 8 a.m., if I know that statistically 65 to 68% of the time, we're going to retrace to this little line right here. Well, then a footprint gives me context on, okay, well, I don't know who bought here. I don't know who sold here. I don't know. I'm not going to sit here and waste time trying to explain the mechanics of why, because we don't. None of us really truly know. It's just a black box and a series of black boxes, and we don't really understand who sold here or who did what. But we do know, the reason why I call it a footprint is they leave behind this really huge wick here on the hourly time frame. And I only say the hourly time frame. I'm not saying it's the best time frame. It's just a time frame I use. And in a 60-minute time span, somebody or a group of people or algorithms or whatever caused the NASDAQ, one of the most liquid instruments in the entire world, one of the most traded instruments in the entire world, they caused this candle in just 60 minutes to snap all the way from here all the way back down to here. So that's significant to me. And so if I know that next time price comes into this area, if we start to see sell pressure start to form when we tap into this area, that's kind of like a little bit of a trigger saying, oh, okay, now let me start getting my eyes on to see, is this where we start getting bearish distribution to then start carrying out the mean reversion of the day, which is the midnight retracement? Or do we break above this footprint on the smaller time frame and disregard this footprint altogether, which also then gives me the flip side of the coin? Maybe we're not due for some mean reversion yet. Maybe we still have more gas in the tank to go higher, and then it allows me to reassess. And so by this point, if I drop down to the 5-minute, the reason why you see me delete it is because we broke on through it. So now this isn't important to me anymore. We've made a new high of day. We traded an in-stat high of day for an out-of-stat high of day. So I can even go in here and just put out a stat high of day. And now what do we have here? So this is a common signature of one of two things that we got going on today. Now you can see that where price currently is and all of the statistical relevance of where price could potentially go. We're not predicting. We're saying that in the past 75 days, you can see on my chart, all of these red levels here have been hit 93% of the time, 94% of the time, 90% of the time, 89% of the time, 96% of the time. All these probabilities beside of them is indicating how many times out of the sample size, in this case 75, have they been retraced. Another one here is opening prices 1 through 7 a.m. It's literally just the opening price projected forward from whatever the start is. So you can see right here, shout out to Miller if you're watching, one of our pack members. He built this cool little indicator, and it does it for you instead of having to calculate it yourself. And this will show you, based on 75 days, that the 2 a.m. opening price has been retraced 73% of the time. 1 a.m., 75% of the time. Midnight, 75. 4 a.m., 83, or is that 89? Whatever. Mid 80s. And then the 6 a.m. is 93. So the reason I'm highlighting all this stuff is to show you guys these all have statistical relevance. These all have high probabilities of getting retraced, meaning price just visits them one more time more than they don't. And so if we have the answers to the test, if we have this kind of like little cheat code telling us of all of these major reasons and how common price comes back to these areas at least once, starting at 8 a.m. until noon, okay, well, now I can start building an idea that if we make an in statistic high of day, if we come up here around market open and make some sort of high of day and break to the downside, this is a common signature of what we like to call in the pack a firecracker. When we have all of the statistics extended on one direction, and then we break above or below market open, in this case, it would be below, and we start to just, and the reason why we call it firecracker is just like you light a firecracker and all of a sudden it goes really slow and then boom, everything just goes at once. Same thing here. It starts off a little bit slow and then just you'll see this aggressive push to the downside to just get a bunch of these statistics. Now that's the firecracker. The flip side of the coin, okay, this is the part that so many in the statistics world, they fail to kind of take into consideration, and that's the other side of the high probability, right? Because if you have, let's say a 70, 80% strike rate of something happening, you still have a 10 to 20% of the time that something isn't going to happen. So how do you fix that? You also find the live price component that disagrees with your overall probability. In this case here, if we go into market open, okay, let's say this is the market open, and by 10 to 10:15, we're breaking above market open. Well, now we know a lot of these statistics, midnight open, P12 mid, P12 low, which is also the out of statistic low of day. A lot of these areas here, and then when we get the daily profiler on our chart, we can also see that a lot of these levels, they start to fall off. And then this is what my partner here, Mickey, is going to get into, is that we see a lot of these statistics that do have high probabilities. They fall off by around 9:45, 10, 10, 15. Now, obviously, some days a little bit closer, some days a little bit further. But either way, we know that around that time period, these start to lose more. They start to lose significance of getting retraced into. And so the live price action component that allows us to say, okay, well, maybe time-wise, we're not going to retrace these today. And from live price-wise, we're not agreeing that we're going to go in this direction, which is in this case to the downside. We got to get above price, and we're most likely going to do some sort of either ranging around above market open or a directional move above market open. Now, this is the final icing to the cake. How do we know that this is going to be a directional move in some way, shape, or form? Now, we never know, but we operate off of probabilities. We know that there's a probability that if we make an in statistic high of day, okay, let's say at market open, we spike up and make an in stat high of day. And so then we do something like this. So we make an in stat high of day, and then we break above market open. The moment around 10 a.m., this is another reason why 10 a.m. is so important. Around 10 a.m., if we exchange this in stat high of day for an out of stat high of day, meaning, and when I say in stat, out of stat, there's only 4 major times that we make a high or low of day on a daily candle typically. And that's around 1800. And I say plus or minus an hour. So if you really want it like a range, 1800 to 1900, 3 a.m. to 4 a.m., market open, so 9:30 to around 10, 10:30, and then market close, so power hour basically, 15 to 1600. So by 10 a.m., if we're exchanging an in statistic high around market open for an out of statistic high, there's only one major checkpoint left for price to potentially make a high of day, and that's end of day. And so that's why you'll hear Mickey and I sometimes will say, oh yeah, high of day or low of day by end of day, because statistical based trading is nothing more than just the law of deduction. We're just deductive reasoning. We're deducting what could not happen, and we're trying to include what most likely will happen. So if we're deducting that the high or low is not going to be around market open or around 1800, 1900, and it's not going to be around London, so 3 a.m., and it's not going to be around market open, then the final time for us to check in, clock in for that high of day would be end of day. And so this is how we kind of put everything together. So now putting it all together and simplifying it in a very simple way, We have an out of statistic low of day, out of statistic high of day. We're breaking above this P12 mid, which is the first major pivot point in the pre-market session. And if we're breaking above the P12 mid and respecting it like we did right here, this is a bullish signature. And if this is a bullish signature going into the pre-market, I'm expecting some sort of in statistic high of day at market open, because then that's going to give us the next clue that if we're going to trade this out of stat high of day for an in stat high of day, if we break below, I'll be looking for extended cash flow shorts to the downside. If we break above, I'll be looking for cash flow targets to the upside. If we leave this out of statistic high and we start correcting now before market open, and we open up the market somewhere around midnight open, P12 mid, somewhere around here, if we still have a bunch of statistics to the downside to take extended cash flow shorts, I'll be looking for that. If we leave this at a statistic high, open up the market somewhere here, and we have enough distance, I'll be tailoring my target to getting a portion of this overall move to potentially make a new high of day. So that's my trade ideas for this morning as we see. Mickey, over to you, my friend.
All right, man. And I just want to point out, you know, like, we can see that the overnight markets have kind of contradicted themselves, right? Let me turn off these little pin trades. One. Right, so we have a short false and then a long false, and now we're up in here, right? So this is just a range of 98 handles, right? So when we see this kind of signature, where Asia goes long, London goes short, right? That shows that they're not agreeing with each other, right? So, and then we look at how tight the range was. It wasn't really that tight, but it leads us to the assumption, and data shows us, just without even considering anything in New York, right? What we've done around that 730, 830 range, we can see that we're expecting high day, low day, all after 930. And you can see that with the out of stat high, out of stat low, right? So that's going on, right? So let me start from the ground up, right? We can see that first check I do is I look at where are we in relationship the previous month 50%, which is right here, this purple line that says previous month mid, and the NFP Friday high to low range, right? If we're above both of those, then I expect 70% of the days to be green, right? Versus 30% red, right? And so why does that matter to an intraday trader? Well, that sinks in where you're expecting high day, low day, right? If you're expecting green daily candles and they've got the statistical edge, right? From a daily time frame, then we know that we should be looking for either overnight lows of days, and there's your midnight retracement happening. You should be looking for the low of the day overnight, 1800 to 1900, 03 to 04, or 930 to 1030, and you should be expecting the close to be the high of the day to be more towards the afternoon session, more likely the end of day, 15 to 1615, right? So that's why that matters to us. Just like if we're below NFP Friday and previous month 50%, it's like, or if we're in a bear market, right? We're expecting, 50% red days, 50% green days, and we have to weigh more heavily on the stats, right? All right. Coming to try to define the weekly profile, right? We know that we can put, what I like to use is Sunday, 18 to 1930 box, and then the Tuesday 930 to 1030 box. If we're above both of those, I'll lock this in as a low of the week. If we're not above both of them, or we're not directional with them, then I can't do that, right? So right now, we've taken out previous week's high. We're above Sunday 18 to 1930, and we'll wait for later in the week, tomorrow to be specific. After 1030, we'll have more confidence about where we are within the week, right? All right. So what we do know is this blue line. If we look at this blue line, which comes off of the weekly chart, not that one, right? And we put the table on here, right? We can see, looking at this chart over here, over the last 16 weeks, right? And this blue line, we can see that we usually 100% of the time, 16 out of the 16 have hit 1% above that blue line to put the high of the week in, right? And we've already hit that this week, right? We can see 93 to get to 1.5, which is where this red box starts, right? And 75% to get to 2%, right? Which is where that is, right? We can see that there's only 31% of the time over the last quarter that we've hit 50 basis points below, which is where the green box is, right? So we already know we've already knocked out two 100% levels over the last quarter for the week, right? So now what we can do is we can put some more data on it. Let's go 56 weeks, right? Because what's important about knowing like where your highs of weeks and lows of the weeks typically come in at, right? Well, we know that from a daily perspective or from a day of the week perspective, we like to put, just like the hourlies, we like to put the higher, low of the hours in, unless it's the 8:30 due to news, the 9:30 due to market open, but every other hour likes to do it in that first quarter of the hour, right? So the first 15 minutes, right? Same thing goes with the weekly levels, right? We love putting the high week, low week within like the first 3 days, right? And then putting the other side in towards the later part of the week. So we pay attention to this, right? So now we're looking at the last 56 weeks, looking at this table right here, right? We can see that that 1%, which we already hit, right, has happened 51 out of the 56 weeks, right? 1.5 is 82%. And then out of the last 56 weeks, 2% to the upside has only hit 33 out of 56, right? So the one thing I will tell you, right, just like the hourlies, we don't do the 8:30 to the 8 o'clock hour or the 9 o'clock hour due to news or market open. The same thing is said within the weekly probability levels. We have something going on this week, right? And that one thing that we have going on this week is the FOMC. We get the dot plot projections, all that stuff. So this might be an abnormal week where we put the high of the weekend on, or the low of the weekend on a Wednesday, and then the rest comes on a Friday, right? And we get that weekly doji candle. There is a potential for that this week, so we have to be aware of that, right? Looking at the downside, we can see that this 0.5%, right? If we looked at it from a 16-week, right? It had a 31%, meaning we have been very strong this quarter and we have not cared about downside targets. If we look at it from a yearly approach, though, it goes from 31 to 64, right? So this is still, we know that we're just in a very, very strong quarter. Weeks are stacking higher. They're not going low. We're establishing the low of the week very early in the week. Like last week, it was Sunday. We had a RTH gap up that we never filled, and we just locked in the low of the week on a Sunday. That's signatures of a very strong market, right? But from a yearly, we still have to consider the fact that 36 out of 56 weeks have hit 50 basis points below here, right? And out of that, right, majority of the time, like the most amount of time, that was hit on a Thursday, right? So 21% of the time it was hit on a Thursday, right? So we're going to keep that in mind as we progress throughout the week. But the one common signature now that we see is that we took out previous week's high. So now we have weekly momentum up, shocker, monthly momentum up, shocker, because we've taken out previous month's high, right? Daily momentum up, shocker, right? When an indice that is slotted to go higher. And so we're expecting for that edge, 70% when we're above NFP Friday and previous month 50%, 70% of the days are green versus red, which means we expect lows of the days to happen either 18 to 1900, 03 to 04, or 9:30 to 10:30, right? So we're already prepping our mind of what kind of day we're expecting to see, right? doesn't mean we won't be able to read the high of the day getting put in and the low of the day being put in during the close, right? But we are aware that the team that you need to bet on is that low of the day being put in at 9:30 to 10 o'clock, 10:30, right? And as you can see here, like just looking at this month alone, you can kind of start seeing that green versus red dynamic that we just talked about. All right, moving on, and we still have not gone anywhere, right? So we've not gone anywhere, right? So this is a 7:30 to 8:30 box. Once we break out on one side, I'll be able to pull the probabilities on it. But we can see that like we are starting to stack probabilities, just like Austin said, the downside, right, that need to be retraced. While we wait on that to figure out what it wants to do, we can start looking at the data, right? We can see that London doesn't have a probability for being broken because it's already been broken. Asia doesn't have a probability because it's been broken during its highest probable time between 3 and 4, and London between 7:30 and 8, right? So we know that those targets are out, right? So we're going to have to lean on other probabilities, right? We can see, like, if we come over here, we're going to look at Globex Open, Midnight Open, right? Midnight Open with no New York 1 selected has a 91% probability, and that probability shows that it likes to get hit between 8 o'clock and 8:45 on a Monday, with Asia doing what it did and London doing what it did. If you can't do that, there is still hope from 9:30 to 9:45 for that midnight price to get hit. The secondary mode is playing it right here. But then we notice, right, after 9:45, if we haven't hit midnight, we're not going to hit midnight. So now we're able to start building zones, bounce zones, right? We know that this midnight can become a bounce zone, right? Where this P12 mid and midnight is, right? We call this the netting feature. So price will come down and possibly net off of this. And we can see there's a couple other things there. We've got Globex Open, which is 1800's opening price, and then settlement, which is 1615 settlement price, right? So this is a zone of interest that we're expecting price to bounce off of, right? So if we come and look, we have New York levels, a lot of 100% levels to the downside, right? Let's go to 5 minutes so we can see it more clearly, pull more data, right? A lot of 90% levels to the downside. However, this is looking back at, what is this? How many days, Austin? These New York levels?
So you're on the 5 minute, right? So with
Yes.
premium, you'll have about 75 days look back.
And so this is looking at 75 days, right? Now, what we're doing right here with the midnight and the settlement, right, is we're saying, and this is just no variables incorporated. This is nothing at all to do with what Asia's done or what London's done or what New York is doing from a time perspective. This is saying over the last 75 days, we've hit every single level 93% of the time. So like this one at the very low. So that means 75 days, maybe 3 of those days did not come and touch this after 8 o'clock, right? So we definitely have to pay attention to that. What we're trying to do is get a more precise zone using 20 years worth of data to say, hey, based off of what Asia did, based off of what London did, and based off of what New York's doing, what's the probability of that exact zone from a time anchoring standpoint? Because like this 91% of the time of midnight getting hit between 8 and 12, right? When do you think live price from a time perspective is saying we don't care about this 91, we care about the 9% of the time it doesn't? We're just looking at this screen right here, right? What time do you think, if we can't touch that midnight price, is the live price, the live market saying we do not care about 91% and you should let it go? Type it in the chat. What do you think your answer is?
And this is the only thing that's weird about YouTube. Is we always we'll have like a weird latency. So we'll be like, all right, here's the question, and now let's just twiddle our thumbs and listen to elevator music for 10 seconds.
Yeah, so I'll give you the answer for that, right? So at 9:45, between 9:45 and 10, if we hadn't hit that midnight price, that's saying this 91% came from 8 o'clock to 9:45 hidden. Anything after that, there you go, good job. Anything after that is just random, right? Like have good luck, right? So we know if we haven't hit that midnight zone by 9:45, like we're gonna let go of this 91% probability. Now let's look at settlement, right? We got 25, 50%, 75. So at 9:30, if you drew a fib from wherever 9:30 open is, the 16:15 settlement price, right? This is the probability on a Monday based off of what Asia did, based off of what London did. You got nothing but 100% probabilities, right? 25, 50, 75, 100. And same thing from a time aspect. If we haven't hit it by 9:45, you got to let go of this. That means the next time we do this, this should be a 90-something% probability because this is the one day it did not happen, right? So now it's safe to assume that right here, let me turn these levels off. Right here, right, is a good spot to look for responsive buying, right? All right. So now, and we still haven't done anything. Yay. So now what we're going to do is we're going to war game. There's 4 possible scenarios that can happen now, right? Let's talk about what those 4 possible scenarios that can happen between 9:30 or between now and 11:30. This is a 7:30 to 8:30 range box. The reason I chose this one is because when we were pulling trend versus reversal data, right, over 20 years, we noticed that 7:30 to 8:30 has the highest probable time to either trend, range, or put in a major pivot reversal, right? Versus, and it's low ranging, just like 11:30 to 12:30. Everybody knows it as lunch hour. Why? Because it seems like the market just stops, right? We usually range a lot during those times. And like, so the reason we chose this 7:30 to 8:30 is because like between 7:30 and 11:30, right? This happened to be the tightest range, right? Over 20 years worth of data. And so, and then we tended to trend, right? From 8:30 to 11:30 more than we did. So we use this as a fixed constant, right? So there's 4 that we can pull data on, right? So there's 4 possible scenarios. From 8:30 to 11:30, we can either do this, right? Or we can do this. And so the one scenario, right, we break out and we just continue going. We do not make it to the other side of that range. The second scenario is we come up and by 11:30, we make it to the other side of the range. And then we can do the same thing if we decide to break out of the downside first. We can either continue going lower and not make it to the top side of that range, or we can go lower and then make it to the top side of the range, right, by 11:30. All right. So one edge that we get to see, no matter what direction we break out of this or this way, right, is that we typically in New York 1, right, whether we go long out of that 7:30 to 8:30 box or short out of that 7:30 to 8:30 box, we can see that we typically go false, meaning we get to the other side of the range, right? So it looks like we're about to go long. So what we'll do is come over here. That's going to be a great opening.
We're getting a SpongeBob, ladies and gentlemen.
Yeah, we are. So now what we can see, right, if we do break out to the long side, which is looking like we might, right, there's a 75% probability that we go false, meaning, right, oh, damn, what did I just do? By 11:30, after we break out to the top side of this range, by 11:30, we will make it back to this low right here from the 7:30 to 8:30 range, right? There's a 25% probability that we do not make it back to this range, right? And usually 9:30 to 10:30, let's look at the data. Let's not just talk out of our butt. But we can see that majority of the times when we cross back over that low right here, right? Majority of the times we do it by 9:30 to 9:45, and if we can't do it by 9:30 to 9:45, we do it the secondary most, 10 to 10:15. So by 10:15, we know that if we add this together, 6, 8, 14, 14, 19, 19, 27, 27 plus 38, so 45. Now that's 50. 50, I don't even know. We know that by 10:15, 60% of the time we should have crossed this low right here. And if we can't by 10:15, then we have to let this probability go, just like we have to let midnight open go after 9:45. All right. So it knows that I'm doing this live session on YouTube. And so what it's going to do is it's going to test my gangster and wait until 9:30 exactly to cross either this high or this low. And I'm going to have to, like, you know, rush to collect the data.
We'll take the knob both sides like 7 times.
Yeah. So if we assume and go with the higher probability of a long pause, right? First and foremost, what can we see here, right? So we're going to snip this from a low day, high day, right? We can see that there's a high likelihood of putting the low of the day in by, let me go back here so I can hover, by 11:30, right? So if we do that approach, right? Let's say we go long false, we know that we're likely to make a new high of the day between 9:30 and 10, 9:45, 10 o'clock, right? And if we do that high of the day between 9:30 and 10:30, right, we can expect the low of the day to be one of these, right? 1430 or 15 to 1600, right? Now, there is a probability, and the afternoon session will confirm this, right? If we like go short false right now and we don't make a new high of the day, which is going to be hard to do because the current 825 is the high of the day. So we're definitely going to make a new high a day. But what this is saying is there is a probability of us coming up here, making a new high a day between 9:30 and 10:30, rejecting, coming back down here by 11:30, bouncing off of like this high impact netting area. And then New York 2 comes all the way back up and makes a new high of the day in the day, right? As a matter of fact, this is saying like we would do this, would come to the P12 low, make a new low day by 11 to 11:30, right? Which is where this mode is located, right? 11:15 to 11:30, and then making a new high day in the day, right? We shall see, right? And it would look like something like this, right? Now, this is, believe it or not, the red is the less probability, right? The yellow is the higher probability. So it's more likely that the high that we see get put in between 9:30 and 10:30 is going to be the high of the day, and then momentum is going to shift lower for the rest of the day, and we put it low of the day.
Long.
All right, there we go. So we knock out half of the data, right? So now what we're going to do is we're going to come over to our little indicator, and we're going to put.
I need to get a soundboard for when we get like New York 1 confirmations. Like we are long, we are short.
So we're going to say low of the day. We're going to go from 11:15 to end of day, right? And we're going to say low of the day from a price standpoint is between the mode to median, 0.3 to -5, right? Where most of the data happens is where it's going to be expected to happen. So we're going to go long false, 0.3, 0.3.
I want you guys to pay attention. If anybody's listening right now, I want you guys to like if obviously if you're not driving, please don't kill yourself.
Yes,
but if you were just listening idly, this is your moment. Like, pay attention to what Mickey's doing, because this right here, if you're either just watching for the first time or if you're still in the pack or boot camp, whatever, you're just getting another rep, this is the most beneficial part right here of wargaming and structuring the day from a statistical standpoint, for then marrying it with live price when market opens.
So
and just
right here,
they said it in the chat, Mickey, but NQ hasn't broken yet.
Gay or dumb. I gotta get back to normal talking. All right, so the higher day is kind of giving us a clue. We see that the mode in the New York session is 9:45 to 10, not 9:30 to 10. So that's kind of giving us a clue, right? We're going to put from our time period, because the day doesn't want to show its hand. We're going to go 9:30 to 1600. We know that because Asia and London was contradicting and in a low range, right, that we can expect high day, low day. There we go. We just did it. All right. We can expect high day, low day both to be after 9:30, right? And then we're going to put our price points for high of the day. We can see that between the mode to median is from 0.2 to 0.6 to the upside. I'm going to get us canceled if I can't not use that word.
All right, that's another thing I might have to have a soundboard. I'm going to have one of those beep.
All right, so now there's only two possible scenarios that we can do, right? We can either go long and stay above this low right here until 11:30, or we can go long, pause, and hit the other side of that range. Right, so now instead of having 4 possible things that we can do, we only have 2. So it makes decision making a lot easier. So now, and we know from a time base, right, we know that the drop off is approximately 9:45 to 10:15 for all of these high probabilities to the downside. So now what we can do, and we're just going to do some practice, right? We're going to say that this is our 9 o'clock hour. Right? This is the 50% of the 9 o'clock hour. This is the high of the 9 o'clock hour. This is the low of the 9 o'clock hour. And this is going to be your 9:30 price. Right? This is going to be your 9:30 price on the 1 minute high to low. Right? So what we're going to expect, if we're expecting this to go false, right? Mean revert back to these high probabilities to the downside, right? We know that we're going to expect either 9:30 to sell and we go, but we're not expecting that. We're expecting 9:30 to go high, make a new high a day, right? And then we're going to we know that we're counter trend trading to get those probabilities to the downside. And we don't want to like just shoot our shot of full position when we're trying to, revert to the mean trade, right? So we have to come up with rule sets, because we know that daily momentum's up, 4-hour momentum's up, 3-hour momentum up, hourly momentum's up, weekly momentum's up, monthly momentum's up, yearly momentum's up. We're going against a lot of momentum to the upside, right? So step 1 that we're going to do, and it doesn't have to be in this order, get below 9:30 price. Now, does that mean we have to wait for all 4 steps to get in position? No, but we're not going to, like, if we have to engage with 10 micros, I'm not going to shoot all 10 micros right here, because I'm just going to get stopped out, and then I'm going to enter again, and I'm going to get stopped out, and then I'm going to enter again, and then I'm going to get stopped out, and then I'm going to enter again, and then I'm going to get stopped out, and then that one's going to win, and it's not even going to make enough money. It's going to break my account back to break even, but then I'm going to screenshot that one that worked, and I'm going to post it on Twitter, because that's what we like to do, right? That's sarcastic, right? But we are going to do it from an approach where, like, we are setting the conditions for us to be successful for this counter trend trade, right? So step 1, we need to get below 9:30 price. And if we have to engage with 10 micros, maybe 1 or 2 of them start right here off of a wiggle that makes us think that whether it's a change in the state of delivery or a break or whatever, right? Like, we can start easing into that position. So if we do get stopped out, it's for 2 micros, not 10 micros, right? So step 1, get below the 9:30, right? Step 2, get below 9 o'clock's 50%. And then step 3, right, is 10 o'clock needs to take out 9 o'clock's low, and then while locking in a Q1 high, right? So step 3, 10 takes 9's low out, and then step 4 locks in a Q1 high, meaning that as 10 o'clock opened up, right, it rejected this 50%, or it just rejected something within the last 15-minute candle, but we put that high of the hour in here, and then we can successfully say, like, that high of the day is locked in for the day, right? It would be nice, right, if it just makes a new high a day and then comes straight down. That would be easy, and like the 930 price is like this, right? And then 930 gives us a little spike up, and then we sell, and then we can just sell and hang on to those extended shorts like Austin was talking about, right? So that's the higher probability move that, like, all statistics are pointing towards being the highest probable trade between 930 and 1130, right? Now we've got to have a determination to tell us, hey, we're not going with the high probability trade, right? So we just look at it in reverse, right? We can't get below 930. Or we can get below 930 and we can't get below 9 o'clock's 50%, and or we can't get 10 o'clock to take out low, and or 10 o'clock rejected the footprint or the wick, at 9 o'clock's hourly wick, and then made a Q1 low, pointing to 9, 10, 11 to stack higher into a line like this. Instead, this would be the lower probability play between 930 and 1130. This would be the higher probability play, right? So now, instead of drawing boxes, I guess I could show you guys the price cloud. All right, we can see right here, right? This is, if you did a Monte Carlos on these exact scenarios, right? Like, you would have an average price running through the middle, and then one standard deviation, like an actual calculated standard deviation, right? This would be like what the structure looks like to the upside, the green line, and what the structure looks like to the downside. This is the median low, this is the median high, right? And I'm not going to try to explain that concept on YouTube, but what we can see is these are the two highest probable paths of structure to be, right? So if we go with the red pill, we know that we should start selling off right now. We planted the high between 850 and 910, and then we're going to get a 930 sell, a deep retracement between 930 and 945. 10 o'clock takes out 9 o'clock low. 10:15 we make a Q1 high, a Q2 high, and a Q3 low, and then we suck back into the range, and we range for the 10 o'clock hour, and then 11 o'clock retraces in. If we go with the green pill, we plant that new high a day. So the green pill, which is the green line, is the highest probability play of the whole day, right? Where we make a new high of the day, and then 9:35 we start going down, and then 9:45 we go down, and then 10 o'clock locks in that Q1 high, like we were talking about, and then we get some deep retracements after 10:30, and we go into a range until 11:30. So that's what we're looking to have in this green section of structure. So biggest thing is like high day, and then deep retracements after 10:30 back to the upside, and we go into a range, right, which would indicate a DWP or a range 1. All right, so that's that, right? So coming back over here, what's the probability of New York P12 mid getting hit? It's 100%, right? We've already hit that during the highest probable time, right? And then P12 high got hit, right, at 8:30 to 8:45, right here where you see the mode to median. But now we're looking at what's the probability of P12 low. We're expecting a new low a day, right? We can see it still gets a say. It has a high probability of getting hit 83% of the time, and that happens between 9:30 and 10 o'clock. So yeah, hopefully this was helpful. I probably lost everybody who hasn't gone through the boot camp, but that's okay. Right, the last thing
I think Josh just needs to know what a long false is.
Of course he does. the last thing I'll do is look at the Asia extensions, the upside and the downside. We see that if we took that Asia, like this would be 1 fib extension to the upside, this would be 2.5 to the upside, this would be 5 to the upside, right? And now we can sync probabilities and times with them, right? We can see that that one highest probability time was between 3 and 4 o'clock or 9:30 to 9:45. Well, we actually hit it at 3:30 to 3:45, right here, exactly to it, and rejected it, right? Now we're saying, is this 2.5 extension off of Asia, or do we need to come all the way up? We can see from a probability standpoint, right, this is 63% probability, and it usually happens between 8:30 and 8:45 if it's going to happen. Well, guess what? It's after 8:45 and we haven't hit it. So now the next probable time, right, is 10:30 to 10:45. Well, if we're hitting that at 10:30 to 10:45, guess what that means? 101st, yay, let's go. Right, that means we're probably executing a long true versus a long false, right? Which means we're ignoring all stats to the downside. And we can sync that up with the higher day. We can do the same thing with our current low of the day for that, which is right here. And that syncs up with, right, this 2.5 to the downside, right? We can see that one, which is below P12, has an 81%, and then that 2.5 in the low of the day zone has a 53%, with the highest probable time being 9:30 to 9:45, but the second probable time being 10:30 to 10:45, right? So zones I'll be paying attention to, right? Obviously, I'm going to be paying attention to this cluster of data right here where you have P12 high, previous day high, and the 1 fib extension to the upside. I'll be paying attention to this cluster of data right here to see if we bounce off of it or just shoot right through it. And then finally, I'll be targeting like this cluster of data right here, right? So once we put in the reversal, get below 930 price, right? Like these are zones that I'm expecting to hit. And that's what I got, Ricky Bobby.
I dig it, bro. We're
Absolutely
looking good, and right at the end we hit. I'm gonna take your guys' word for it. I've been watching. We keep teeter-tottering at like 99, but I'll take your all's word for it. I'm assuming we probably hit it. So stick around. So as we get into the market open and trade and stuff, and we finish our trades for the morning, we'll do a little giveaway. So we'll do it right around the middle of the stream.
15 people. We've got 15 people.
We got 15 people. Everybody drops right away.
All right,
Carl, turn your bot farm back on.
Yeah.
Yeah, I got you.
Thanks, man.
Absolutely. Hey, real quick, what do you got for your long false and long true? Is this
it should be,
it's a little bit different.
From 0.2 to 0.6.
0.2 to 0.6 for long false, right?
Yeah. So it's about
at 10:30 to 11. What's your time?
So what I got for my time is, and I dragged it out throughout the whole day because like I've got the highest probable high day, 9:45 to 10:15. But you got to put broken in for London probably.
No, I got it.
And you got short, long false.
Yeah, I got long false median 10:30 to 11.
10:30 to 11. What the heck? What in the tarnation? Somebody's got something not selected. Short false broken.
Yep, short false broken.
Long false broken, and then long false. What in the tarnation? Are you selected yes or what?
No, I got NQ right here. Looking right at it.
That's weird. I don't know why. But basically, I've got low day, highest probability, 11:15 to 11:30, which supports that hell of a firecracker. I've got high day from 9:45 to 10:15 or end of day. I probably did something wrong, and G will just drop in the chat what I messed up.
No, I mean, it's literally just by like 15, 30 minutes. It's not a super
Either
big
way,
deal. We got the
oh,
high
you know
day
why? You know
anyways.
why? Because I bet you. So if you do the mainstream like I do, right? This
Uh-huh.
is 30-minute buckets. If you go to the wargaming tab, right, and do it, right? These war games are broken
Oh,
by 5 minutes. So these are 5 minute or 15-minute intervals, right? Each one of these, oh, no, these are 30-minute intervals, right? So these are
yeah.
broken down by 30-minute intervals. That's why. So I usually,
See.
like, if I need to do a quick guide because it did it at 9:30, right? Like I'll use this, but if I have the actual time to do it, right? Like I will just stay on the main daily profile page and do it because like I get 15-minute blocks instead of 30-minute blocks.
Too easy.
And then on the next daily profile, which incorporates like Asia, London, and previous day sessions, right? Like that one is going to be doing 5 minutes. See if we can get it as close to a 5 minute. All right. Are we ever going to get this midnight retracement signal? All right. So remember, red pill. If we do red pill, right, we should start getting momentum to the downside before market open, and then market open would be continuation. But like, look at the red pill. This is telling you we're going to P12 mid, and we're bouncing off of that P12 mid, and then that was the move, right? If we go with, wait, something is off. Let me put false. There we go. Sorry. We go to the P12 low, make a new low day, and then we retrace after 10:30, right? But the red pill has a sell-in before, and 9:30 will be continuation sell-in, and then we usually reverse around 10:30 and suck back into the range. And so it's pretty easy to see if that's what the market's doing. I never bet that that's what the market does, right? If it does it, yay, it's going to make the sell at 9:30 easier, but I'd never front load because of what you're seeing happening, front run because of what you're seeing happening here.
Yep.
But yeah,
That's why I'm telling you guys, like, we talked about this last stream last Monday. It's actually going to be a video this coming week as well. Which, by the way, we have a good chunk of people in here, so I guess this is a good time to say this. So if you guys enjoy these streams, all we ask is literally just like it, and if you know anybody that you think this could help, if we talk about a specific thing about this stream that you think it could help somebody, just share it. We're trying to get this out to as many people as possible. But in addition to
and
that,
if
if
you
you
like,
find value, yeah, go ahead.
I was about to say, and if you like having the access to data, that dashboard that shows all the data, like the 25, 50, 75% of midnight or RTH fill or midnight retracements or whatever, right? We also have that. We have a candle science, which is putting the probabilities behind open, high, low, close, no matter what time fractal you use. And we also are going to be releasing a journaling software, right, that will be customizable to your model. All that, right? And you just got to join the boot camp. Why? Right? Like, we don't believe in just selling our products without actually professionally training you on it. So the boot camp is $100 and it goes for 3 months, and we teach you a repeatable workflow. We teach you risk profiling and how to like actually build a risk profile, and we teach you, like how to like utilize stats and align historical data with live price, and when to expect it to happen and when to not expect for it to happen. And you can see the QR code. So there's my little sales pitch, right? Next boot camp will be starting October 18th. Once October 18th hit, I shut the door. I don't accept nobody new. I don't really care if you made it, right? It's just is what it is, right? Like, I have my own students that I have to focus on. But yeah, I'll pass it back to you.
Yeah, no, I'm glad you said that. Like, this is why we do these Monday streams. Anybody and everybody, you guys get to see how we trade, how we articulate what we're doing. As we explain the why, and then if you want to learn the why, exactly what Mickey said, the boot camp. And in addition to that, we're going to be taking snippets of videos that we do from these streams, like key moments. Tuesdays, Thursdays, and Saturdays, we're going to be having pieces of these live streams posted. And then on Fridays. If anybody missed the announcement in the Discord, on Fridays, we're going to be doing a free stream as well, just like we're doing today, but it's not going to be trading. It's going to be from 8:20 a.m. EST to around 9:15, 9:20, right before market open. We're just going to do exactly what we did just now. We're going to give you guys our war game, give you guys our analysis of what we see for the day, and then we're going to go and trade live with our community in our Discord. So we do these on Monday, so you guys get to see. We practice what we preach. And then when it comes to the boot camp, like Mickey said, we start on October 18th. Then how it works is it's a one-time fee, 3-month process for the boot camp. Then if you want to watch us trade live and get access and continue to use the tools, like Mickey said, we're coming out with a journaling software. We're here soon. The gunship that you see on my screen right here that shows probable price movements. This is going to be into an algorithm that's also going to be a part of the benefit of being in the pack. So all the tools that you guys see us use, it's with your membership, and that's the only way to get into the pack trade group to see how we trade live is you go through the boot camp. We do that so that way you guys aren't sitting here asking 100 questions while we're just trading live. You actually understand the context of what we do, how we position size, all of the tools we use, all that stuff.
Yeah, Nicholas has a good question, and I definitely can appreciate this. He says, do you guys share a track record? Yeah, we do. So not only do we share a track record,
yep,
right? Austin shares his track record every month, right? Every week, right? We live trade in front of you every day, so you can see us take the wins and losses. We share the accounts numbers with you, so we don't just do 90% of Twitter, where you buy 100 prop accounts, you trade them, and you only show the ones that win. And then I manage the live side, so once a quarter, you get to see the live account with every trade taken, right? And it's not a prop account, it's an IBKR, right? So yeah, we're not scared to, number one, trade live in front of you. Number two, show you the track record. Number three, help you build your own business plan, so you don't have to ask silly questions like, well, what's your track record? No, because you're worried about you making money, not us making money. But yeah, we're very transparent traders, and you get to see when I have drawdown, when I'm going through the doomsday scenario with my models. You get to see the whole thing, because the one thing that we find very important, listen, we don't need your fucking money. We're here with you Army vets who really try to be transparent and honest. Why? Because there's too much scummy shit in the industry, and we want to show you what measured moves actually take place, not just some random dude on Twitter building a PDF. But then we want to show, like Austin said, we practice what we preach, we live trade, and we show that transparency. And not only do we do that, but our students do that as well, right? The people inside the pack trade group, the people inside the boot camp also. That's near and dear to my heart. When I talk to Austin, I say, listen, I want them to see the good, the bad, the ugly, the sad, right? Right. So yes, we do that.
Yeah, and just
I'm
to
left-handed as well, Huts.
just to further what Mickey's saying, one thing that I find a ton of value in, I know a lot of people talk about track records and stuff, and yeah, we share that. I share my trade executions, win or loss or flat. We share it all. But in addition to that, I think one thing that really I find a lot of value when I'm trying to see or understand how people articulate their edge, I like to see them trade live. I like to see how they act under pressure, because it's really cool to sit here and, talk theory and academics when it's in a controlled setting, or when we're back testing, or when we're clicking the button. But I think that's all good and dandy. But if you can't put that into action, what's the point of it? And so what you'll see me do is, I don't know if you're new here, and this goes for anybody who's still new here, go to my Twitter. It's X, what is it? AC trades _ pocket. If you could just drop the link in the chat one more time. And I post my analysis and trade ideas based on my analysis every single morning. This is one thing that I tell everybody is one of my biggest pet peeves in the social media trading space, is everybody wants to claim that they have this amazing way of trading and they're just so good and they're so blah, 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 blah. But if you're so good, I don't even want to see I don't want to see how much money you make. I don't want to see none of that. I want to see you consistently call and execute your analysis for just a quarter. Like I want to see how your analysis and the trade ideas that you generate from your analysis before the market even prints the candle that you're anticipating to trade. I want to see that over time. And so what I done was,
yeah, go on. My bad.
Well, and what I done and why I do that is I got motivated to do that just because of that. But then it kind of started becoming this thing where I just consistently do it because it's kind of fun for me to look back on my own way of executing and planning. But then it shows you all that it's completely possible. You just have to show up and stick to the same thing. You're going to be wrong. Sometimes you're going to be terribly wrong, but sometimes, and more often than not, if you use statistics that repeat more often than not, you're going to have that consistency kind of baked into your decision making, and now you just have to execute. So yeah, go ahead, Mickey.
Yeah, and you got to find yourself, like, maybe you listen to us, maybe you listen to somebody else. Like, the biggest thing is like, don't fall for the librarians. They will keep you in the education phase. That means they always need to produce another theory or another thing, and they can quote stuff, but they don't trade live consistently every day, right? What do you do on the days that you're not in the right market environment or the right volatility environment? Like, are you still trading? Like, they leave unanswered questions, right? And then to the people who just like quote levels, right? It's one thing to quote levels. It's another thing to actually execute off of that, right? Because I think everybody in the audience can say, I can call 24220 and 24120 as a level, right? And guess what? Cool story, bro. Right? And whichever one that gets hit, like, yay, like I was right. But it's another thing to manage the position, right? And we know that there's different market environments, and there's times to be a range-based trader, there's times to be a trend-based trader, there's times to be a reversal-based trader, and they don't act the same. And there's times to be a cash flow trader, right? So if you even have to ask for a track record, that tells me that you're looking to glorify me. And the one statement before the market opens, I tell people, is the educator's job is to get you from not familiar to familiar with the concept. Testing is to get you from familiar to proficient. But the only thing that can get you to mastery of anything is when you yourself and the live market, not back testing, none of that nonsense, but you say, hey, live market, this is what I see, and you actually make those decisions in a live market, right? That's what gets you from proficient to mastery, and then you're actually in the compounding phase. There's too many people out there that are trying to keep you in the education phase or the testing phase. Like, your job as an individual trader is to get yourself to the point where you trade one setup and you understand the risk profile and you know the position size of that, and you don't need people like me, Austin, or any of the gurus out there, because you found your thing that makes money. And the biggest thing I can warn you is, like, Twitter's full of shit, right? You got people posting like nonsense, and you guys are falling for it like crazy, and it's just, I don't know. Like I said, you work hard for that money, right? Then to blow it on people. But yeah, market's about to open, so let's get after it.
Yeah. Daggone it. Got 1 minute. That 928 candle, bro. 928. That's Patrick's favorite candle.
Patrick, the market maker. That's just on his Citadel desk.
Maker. Yeah. All right, one thing we're going to do here is we got 30 seconds left. The first thing that I look for is I look for the range size. So how large does market open? This is what's going to dictate my risk to see how many contracts I got to use to define my invalidation. And then also which side we break is going to determine how large my TP is going to be towards the statistics for the day.
All right, market's open. And we are pumping. Let's see how the market closes. The 9:30 closes. All right, we're approaching that 2.5 above Asia. We know that it needs to get hit between 9:30 and 9:45. If it is going to get hit. All right, so pretty strong 30 seconds.
So far, we got a 0.1% market open range, so pretty decent so far for defining risk. With a good in statistic high of day at 9:30. And we are long with no false just yet.
All right, that's a pretty green bullish candle, right? So now the next measurement is, can we make it 10 basis points above the 930, or do we turn around? I'm not taking this long. I'll just sit on my hands for now. We got the distro for it. We can definitely do it, but I have the rest of the day to milk longs. Right now, I'm trying to see a reversal.
Yeah, right now, I'd say until at least 9:40, 9:45, I'm really interested in this short, not so much this long. I agree. Dr. Legacy, there is a 2-minute delay. Am I the only one? Yeah, sadly, YouTube, I don't know if it should be only like 20 seconds or so, but that's just
down to the
what
930.
That's what YouTube does. All right. Yeah, I'm not taking this long.
Yep. So now, right, we know that the highest probable 15-minute candle is going to be up in green, right? Up in green, right? So if you took this like this long, rightfully so, right? You should be seeing, can we at least make it 10 basis points above this 930, right? Or are we going to reject and lose the 930 altogether?
Him and D put it in 2x speed. Also, make sure, Dr. Legacy, and this goes for anybody, if you're super far behind, make sure you tap the screen and click the live. Make sure you're actually watching it live instead of like just far back in time. Yeah, there you go. Pocket set it.
No, it's been a while since we've had a true day, so.
Has it?
Yeah, we didn't have a true day once last week. I don't believe in one. Or did we?
I don't remember, but let's see. Friday was false. Thursday was false.
Very strong open.
Wednesday was false. Yeah, we could. Hey, that wouldn't surprise me.
Hey, that'll make 10 o'clock will make it very obvious for any longs needing to be taken.
This example right here that you guys see is an example. It's kind of like a hybrid of Tom Hogard when he says, I'm paraphrasing, not quoting.
He says
the trades that you guys take. But he says, God, you goofball. You threw me off my train of thought. When you're taking a trade, or when you're about to take a trade, or overmanage it, or you're having any like of negative emotion, just ask yourself, like, is this a trade you would happily, number one, would you lose? But number two, would you regret doing anything different if you either bottleneck your expectancy, so like you close the trade early, you overmanage it, you take TP, versus watching it go fully to your TP? It's the opposite of just executing in general, or the other side of the coin is, in this case here, we get above market open. And so I know that generically with market open, we get between a 0.1 to a 0.2 or 0.3% positive price movement. But I have to marry this with what statistics we have at play. And right now, the time risk is this still can be a beautiful high of day. And we just have to now get back below market open to firecracker all these statistics. If we stayed within market open and by 9:45-ish, we started breaking above, I would be more inclined to look to take that long. But right off the gate at 9:31, we still have way too much time risk to break back below market open and firecracker these statistics. So this is just me saying, would I rather take this? Would I be losing against the winning team and take this trade just for that 0.1% gain when there is a lot of reasons against me to say you're going to take on drawdown / potentially get stopped out for just normal statistics. And again, we go false more than we go true. So if shift over to my screen here, this low right here at 24,129.50. This is what's going to define this New York 1 session to turn false. We go false more than we go true for New York 1, NY1. And so that's another reason why by 9:45 to 10, I'm putting a lot of pressure, or from right now till about 9:45 to 10, I'm putting a lot of pressure on, at a minimum, if we get below market open, can we get to this level right here, which then is going to come into my favor of if we get a close below market open, where can I extend my target to for an extended cash flow TP? If we stay above market open by 9:45 to 10, I'll be looking at a continuation trade off market open here around the 10 o'clock time to trade the quarters. Or if we make an in statistic high of day right around this time and start reversing right now, this will be the short.
All right, so this has been a new 5-minute candle, and we have been like rejecting the previous 5-minute wick over and over and over again. So let's see what it does now. Obviously, we want it to retrace into the previous 5-minute candle, but let's see if we can get that push to the downside, or is it going to bounce off of the 25, 50, 75, or is it going to shoot right through? Right, we're looking at the 10 basis points higher to see if the market is strong enough. Can we, usually by now, we're over the 10 basis point if it's a really strong market, right? Or a really strong 930 and 945 trade, but yeah.
Correct me if I'm wrong. This is all-time high too, right? Yeah.
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 If you took the 930 trade, you just hit 50% of, you hit TP number 2, which is 50% of the 930 to 10 o'clock distro, right? So that's your first approach. I mean, your second TP, your next approach will be closing the trade at 944, wherever it sits.
That's another thing I'm looking at too, is I wonder if we're going to stay around market open here, and then 9:45 we start that reversal.
Yeah, or even 10 to 10:15. This is showing that kind of. One thing that we can do for the people in the Discord is we can live stream this in the Discord, so there's no delay for them, right?
Yes. Yeah, I think you can. We would probably have to use OBS maybe.
Oh.
So that way we could cross stream, because that way we could share a screen. Yeah, I think it's possible. I just have to figure it out.
I can share my screen technically in there. The only reason why I didn't do it is I felt we kind of wanted people in here to help algorithm and all that stuff. But you're right. I guess for the actual
that's true
trade, it may be worthwhile for me to share mine live.
All right, we're approaching at 10 basis points higher. This 5-minute candle's up at this point. She's going. She's going. And guess what? Like, do I feel any regret whatsoever about not taking this long? Did I see this long? Absolutely, I saw the long. I saw, right? Turn this off. Right? I saw the 8 o'clock footprint, or I saw the fact that 9 o'clock's above previous higher 50%. The fact that the 9 to 9:29 is bullish, so there's 84% probability of making a new higher high. Right? I saw the fact that 930 came down, no wick on this candle, volume imbalance there. Saw that, tested the 9 o'clock open, rejected the 9 o'clock open, snapped higher. Saw the 25% rejection. I can take this long all day long. Ha 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 ha. Right? And you guys have seen me, but because the higher probability trade is to the downside, I have to display patience. This long will appear, or the short will appear at 930 every single day for years on end. I've been milking it for years. My job is to just display, do I just want what the 930, 944 gives me, or do I want the higher probable trade, which is to the downside? But this is what it's like to let live price control your trading, not historical data. Right? I could be selling blindly right here off the 10 basis point rejection, well, guess what? I'm about to get stopped out. Or I can set the conditions where I wait, right, until 9:45 to 10, right, to see if we can put the proper reversal in, or 10 to 10:15, right? Can we put a proper reversal in, right? So yeah, like I missed the long. That's okay, right? Like it doesn't hurt my feelings because in the next 1,000 days, I'll catch this long when it syncs properly with everything.
Yep.
This could be the low of the day right here. It just happened at 4:04. Wait, that's still from Friday. Golly. It did not update my numbers. 0.4 to 0.3. 0.3 to 0.5, long pause. Oh, okay, I see what's happening. That's the long true. Cool. And the cool thing is like, when you know how to trade every single hour in the statistics of every single hour, the 10 o'clock hour is going to, if it's a true long true day, the 10 o'clock hour will give me a 05 breakout, a previous hour 50% rejection, or a wick rejection that I can execute and collect my cash flow on.
Yes, sir. Biggest thing here that we're, I guess, trying to double down on to explain to you guys is something that a lot of people don't really like to talk about because it's not sexy or fun, and that's just being patient and sitting on your hands. Because the thing is we're not looking at winning a trade, we're looking at managing risk in the process. And the process is, in an example like this, the process over time, and I think it was Jesse Livermore, he said this from Reminiscence of Stock Operator. He's if you have a plan, if you have a trade plan, you win for life. If you just trade to win a singular trade, you're winning. You're trying to win for that one trade, but you're going to lose in life. If you have a plan, you're going to win for life. So that's something that a lot of you guys have to really make sure you have in the back of your mind. But this is something we love to kind of talk about when the opportunity happens, where it's like, this is a potential trade, but is it a trade within my process that I would feel comfortable putting risk on and, paying for if I had to pay the expense of this trade? And this will be an expense I really wouldn't want to pay for. And so in this example here, and it's kind of cool that Mickey and I both are on the same side of this. Dude, we wait for the opportunity for the trade setup
Notice
that meets our criteria.
We're rejecting that 10 basis points above the 930
Yeah,
hard core.
we're rejecting it pretty nice right here.
Yeah, so that could be the first sign of this reversal.
Why don't you explain to everybody real quick before we get into it, if we do get it, what's your 4-step process to find a reversal?
Yeah. So the first one is, because of the way price plays, this is the 9 o'clock's 50% right here, this little orange box. Step one, right, we're rejecting 10 basis points higher, right? So step one would be right here, this 9 o'clock 50%. Right now, we know that we usually don't just crash down, right? Like the market doesn't just move straight up and down, but it does ebbs and weaves, right? So can we get below that 50%? Then step two, can we get below 930? And then step 3 and 4 is, can we reject either this footprint right here during the 10 o'clock hour, right? Where the close, wherever the close is in this high will be where it's at, right? And then can 10 o'clock take out the 9? So step one, 9 o'clock 50%. Step two, 930 low. Step three, rejection of the 9 o'clock wick 50%. Just anything to make a Q1 high for 10 o'clock. And then step four, 10 o'clock closes and takes out 9 o'clock's low. All right. So that's what I will look for, because if this is a true high of the day, I got the rest of the day to milk the shit out of this and leech off of this high of the day. So yeah, that's it right there. So now as price comes up, we're going to open up the new 15-minute at the 50%, right? At the 930 high, at the 25% of the 930. We're going to pay attention to the price response. We will definitely pay attention to this 15-minute wick that is from here to here. Do we come back up, reject 10 basis points again, and then shoot down? Or do we just start shooting up, and this 930 low was the 930 test of the high, was that the one that you should have been bidding up? we know that this 15-minute candle doesn't have a wick on it, all right? So we're looking for that rejection. I'm not a big fan of shorting, number one. Like, I really suck at it. Number two, right, when an indice that supports 42 different economies, consumers, companies, insurance, money market, everything, 401ks, pension plans, all of that, right? So when the probabilities tell me, hey, buddy, you should be a seller today, like, I make sure I set the conditions. And number three, the reason I don't like shorting the NASDAQ is it represents American companies, right? But statistics are statistics. I just make sure that if the probabilities like today show me that we have all these probabilities to the downside, right? I'm not going, and it's a counter trend trade of momentum, right? Then I have to set the conditions for me to be right. I haven't taken one trade yet, right? And yeah, it sucks. Like, trust me, I want to come out here and look like an all-star trader, but I'm not, right? Like, I'm not going to jeopardize my account, right? Like I have to have the conditions met for me to do that. And that's just how it is. Like, we saw a settlement, which is right here, has 100% level, 100% probability, right? Even if we just look at it from this approach, let's erase everything. And let's look at this settlement on a Monday, right? We can see at least 25% has an 84% probability. It could not do that by 10 o'clock, right? So that means it's a very strong market, right? This is where the other parts of your portfolio do the heavy lifting, right? Like, the companies that you're in with dividends, guess what? They're catching a bid right now. The companies that the QQQ positions, the TQQQ positions, they're catching a bid, right? So my intraday part of my portfolio can just sit on its hands and be happy, because guess what? Other parts of my portfolios are very, very extremely happy right now. And that way I don't have to counter trend trade. I don't have to go with the trend, because like, it's the lower probability intraday move, right? I can just display tactical patience. All right, we're rejecting that 10 basis points again.
And don't forget, guys, it is 9:48. We, according to the statistics of the day, we don't drop off to turn false until around 10:30, 10:45. Mm-hmm. So the longer we stay kind of just even just hovering above market open here without making any major movement, the more I'm kind of excited to see if we get bearish distribution or a break below market open, I'm going to take a short.
Extended GP, extended position.
And then if live price says, cool story, bro, we're gonna go higher by 10:45. Hey, you guys could be seeing a free live trade session today where we don't take a single trade. We got 124 people. I just noticed that. Hey, if you guys got value from the stream so far, hit that like button. Really appreciate it. I don't know if it actually helps. I know a lot of people say it does. I don't know. But it's cool. Tells us, it makes us feel good.
All right, there's your 15-minute high taken out. Let her go. Like, once you get over the fact that you don't have to be right or wrong, you just have to be patient, take a repeatable setup over and over and over again. Know when to turn that system on, know when to turn it off, right? Know how to put an expected value on that system, know how to position size your risk per trade based off of that expected value. Like, trading is boring. This is what boring trading looks like.
And then, like, you just have to know when to hold them, and then sometimes know when to fold them.
Calm down, Willie Nelson.
Got to know when to walk away.
Know when to run.
How did you know? How did you know?
I just know.
My trade plan?
I know things.
He's the best trader that he never even knew it.
Yep.
He never even knew that he was given the best trading advice in the world. Oh, by the way, I forgot to answer this. Somebody said I'm left-handed. No, I'm not left-handed. It might just be the camera. I'm right-handed.
I am. I'm left-handed. I'm weird though. Like I shoot with my right eye, right? Like I'm right-eye dominant. I throw with my right hand, but no. I'm left-eye dominant and I write with my left hand, but everything else is right on my body. So like when I was learning how to shoot, I had to learn how to shoot with both eyes open, which actually paid off when I went to Iraq and Afghanistan and we started doing close quarters combat, because they teach you to shoot with both eyes open anyway when you're clearing houses and stuff.
Yeah.
Whoa, there she goes.
She's running.
All right, so this is looking more and more like a long, true day. Right? We didn't swipe the 9:30 range whatsoever between 9:45, 10, 9:30, and 10. So now we have to consider possible trend day up, right? And guess what? We missed the move. And that's okay. But you know what we didn't do? We didn't lose money because we do trade these retracement probabilities a lot. And we saw that there was a possibility for a trend day up, right? It wasn't the higher probability, it's actually the lower probability. So usually when you don't have a proper business plan or a trade plan or a risk profile or a system that tells you when to turn on versus turn off, we'd be taking a loss right about now. And that loss would sting, and this loss would be not a fun way to start the Monday. But because we were able to identify the market environments, right? And those market environments said, hey, buddy, possible long true, trend day up, you're above P12 high, right? Like we're able to like not take that loss.
Yep. Guys, remember, you're always going to be wrong too. Like no matter what you're looking at, you're always going to have a deviation, a range of just, you're just wrong. And this is where, like, I guess these type of live streams I enjoy doing, where you guys can see, you know, it's when you watch a lot of these live streamers trade, when they're live streaming, they're just trying to trade to like keep you entertained. Where there's like, all right, let's find a trade. That's not really what we want to do or what we want to promote, because that's not really realistic trading. Like you don't come into the market, sit behind your chart and be like, all right, let's get into a trade. No, you plan, you focus. And if you really want to, you know, do this like a profession, like a business, like you want to be methodical in some sense. Every successful business has some sort of method to the madness to it. And so what you see us doing, you get to see the fun, sexy side where we're just like, dude, done in 5 seconds. Sometimes you see some times where we get slapped in the face a little bit and we're just like, we can't get
punches us
ever
and
live.
Stopped out over and over again.
And you may see it like this where we're just like, dude, we is what it is. Live price is disagreeing with our analysis and we move on. This is the reality of trading. And this is what we want to promote. The ability to say, all right, it's okay if we don't see the trade.
We're approaching the max distro for the New York one.
Let's see what I got. I got for median distribution on a Monday, I have 0.53%. That's not a lot at all. So 0.53% gets us like this. And if I go back to the 1 minute, find the low of 8 o'clock.
So this is a true long true, like price model says you should buy the Q1 low. It should reject off of previous hour 50% or one of those levels. I'll be right back, dude.
Yeah, no worries, man.
Gotta grab breakfast.
Yeah, I got almost max distribution as well. So if you guys see this on my screen, this is just telling me the median price movement on any given day between a time. So right now I'm looking at from 8 o'clock to noon. This table is telling me that in the past, if I go to the 2 minute time frame here, the past 30 days, current month pretty much, in the past or 6 Mondays from 8 to noon, we've moved 0.53% worth. And so what I'm doing is now I'm seeing, okay, well, here's the lowest point that price made starting at 8. And then here's that 0.53% projection. And so now if we're getting to that max distribution, like what Mickey is saying here, this is where we kind of say, okay, we're at max distribution of the session, meaning this is typically what we're going to do already. So kind of like we call it, think about it like a checkbook. We've spent the budget. So if the budget of the day has now been spent, we can start to anticipate some sort of mean reversion if we're going to. If we're going to do a true scenario, we're going to rip right through this and keep on climbing. And so this is where it kind of gives us that context of, okay, going into 10 o'clock, if I draw out my quarters here, 10 to 11, split the hour into 4 even pieces. Statistically, we make a high or low in Q1 and then the opposite in Q3 to Q4. So if we make a low in Q1, we're most likely going to make a high in Q3, Q4. If we make a high in Q1, we're most likely to make a low in Q3 to Q4. So going into this hour, if we're going to potentially be a true, where we're not going to reverse back to this low, we're not going to retrace to these statistics to the downside, then what I'll be looking for is going into the 10 o'clock hour, number one, wherever the opening price is, do we make a lower wick? So do we go down here, make the lower wick for the 10 o'clock hour, and then into Q2, do we get above the Q1 high, where I'll then be looking for either a bullish entry to close above the 05 box, anything that gets me into a long right here to continue to the upside. And that'll be the trade that I'm looking for. With roll, could that affect some things? Julie, honestly, could. Obviously when you're in the roll period, weird things happen, but just like we talk about with anything, with high impact news, with news days, no news days, why did price do this? Why did price do that? We can only have really educated guesses. We don't really know. And so instead of like just wondering, I'm tunnel vision into my process. Just because we're in all-time high territory, it does not change the way statistically we print the daily candle. Just because it could be an FOMC day does not change statistically how we form the daily candle. Same thing for a lot of these things. Now, could there be some plus or minuses? Like, on an NFP day, you'll notice 8:30 tends to be more or less a high or low for the day. Yeah, those little nuances, but I try not to worry about every small little potential thing. I focus what's right in front of me. My stop loss is what's going to do that worrying, and if my stop loss gets hit, my stop loss gets hit type of thing. Gunship was right. Yeah, dude. I mean, it knocked out all these levels. And this, Hut brings up a good point. If you guys want to know even more context into why Mickey and I are kind of like lackadaisical, where we're just like, all right, well, we missed the move. So we've built an algorithm, and it's called the Gunship algorithm, and it's taking a lot of cash flow trades. So regardless of what we're looking at, where we're marrying it with live price and stuff, we've developed an algorithm that is going to be trading these just very ankle biter, low hanging fruit cash flow moves. And so as a trader, I'm getting exposure to that already, just automatically. I'm getting it passively. And so that way, manually, I can hedge my algorithms by using my experience. In this case here, my experience tells me we make a high more than we don't around this time. And so if we reverse around this time, getting back below market open, I know that's the better edge for a trade manually that I'd want to put risk behind. Because remember too, we still have until 10:30, 10:45. Okay, so I'm still just chilling. Either 10 o'clock is going to tell us, is this going to continue? We take the 9 o'clock high and we continue to the upside, or is this where because again, we're still in that time period to make the high, but we're breaking right now. You can see this as we speak. We're breaking above the distribution for a long false high of day. And so if we break above this distribution of a long false high of day, in addition to making a Q1 high of 10 o'clock, this is making me believe we could continue to the upside. But again, I'm going to be patient, wait for everything to align. Squiggly lines, smart money education. Who is this? Squiggly lines, smart money education. SLSME. Danny Walker doing the oldies proud. That is funny. Who is that?
So we're seeing if this is going to be a potential sweeper, meaning we swept 9 o'clock's high, the reverse, but right, that usually happens in the first minute, and then we suck back in the range, breach the previous hour 50% if it's true. So we will pay attention to that, and we've done that on the first minute. So let's see. Still have no desire to. I won't take longs, 05 breakouts, longs for 10 handles. Or I'll wait for captain backtest long to, give me an entry. But I need a retracement for sure. Like I'm not. I'll take 05 box breakouts to the upside for 10 handles, or I'll wait for a retracement to get my captain backtest trade model for longs. And if we do reverse there, right, like I'll wait for us to be below 930 before I take that trade.
10 to 11. Can you explain how the numbers in the yellow boxes work with the entry aids? Yellow boxes. Can you explain how the numbers in the yellow boxes? Numbers in yellow boxes. Are you talking about these yellow boxes? So if you're talking about these yellow boxes, these are just the projections of what we did in the war game. So if you guys missed this, you can just watch the beginning of this. But these are the projections for both. If we're going to make a high of day, these are statistically from a distribution standpoint. So from price movement, this is where, if we're going to go long false, that's what LF stands for. This is where we could have the high of day. And then time wise, it's 10:30 to 11. So this is the price and this is the time. And then same thing for this. If we're going to go long true, so if we're going to, when it says long true, meaning we don't come back and reverse to the other side of this range right here, then this is how much we could potentially have the high of day, all the way from the bottom of this box all the way to the top of this box. And then this is the time, if that makes sense. Dang it, I'm muted. I'm short. Who's the Matrix brain? You guys got to let me know who you are from the Discord. You got all these different usernames. I can't keep up. Austin only knows yellow. Be more specific. Yeah, dude. There's like, I got a yellow box down here. I got a yellow box over here. We're all yellowed out, man.
Definitely got a sweeper happening. Like, meaning 10 o'clock's swept above 9 o'clock's high, stuck back in the range, and now we're just trying to see proper displacement downward. Like, can we break out of the 05 box? Can we breach previous hour 50%? Right, those kind of criteria. Was this run up for nothing, or is it going to give us continuation? Right now, because we did not swipe the 930 at all, right? Like I would expect, like this sweeper to happen during those kind of events. So like right now, I'm just being patient, sitting on my hands, and seeing what, like at this point, right? A lot of the probabilities to the downside are dropping off if they haven't already, right? And my job is to learn how to buy the dip, right? And wait for the conditions. Like I'm being patient in this first 15 minutes. And I get it. We all don't want to hear that, right? We want to be in the long that just gave us, 50 handles, right? But I have to be patient and let the conditions set up for me to properly enter. Imagine if we were trading the sell, right? We'd have been in drawdown the whole time. A lot of drawdown. Same thing goes with the longs. Like I don't believe in buying green candles, and I don't sell red candles. I wait for retracements and pullbacks, right? I mean, I guess I do have like 05 breakout. I always wait for the retracement. Now, Austin's a little bit different, and the gunship is a little bit different. It's been trained, but those breakouts, right, have been measured across a lot of years, a lot of data, right? And so, like, It just takes a trade when the conditions have been met. It shoots a position, right? But that's because it's been, tested over and over and over again. It's been sampled across different market environments, sampled across different volatility environments, right, to be able to do that. O5 breakout going to the downside. That is what sellers want to see.
All right, this is the first 5 minutes of the 10 o'clock hour. Here's the 05. Now remember, in Q1, typically Q1 makes the higher low of any time horizon. So in this case here, there's one of two things that we're going to be paying attention to. Here's the 05. Here's the high of day within the time that we can make a high of day, within the distribution that we can make the high of day. And so now we're going to see, is this down move, the first major down move here, is this down move, the down move to make the wick of this 10 o'clock hour to where then we get back above the opening of the 10 a.m. And then in Q2, we take Q1 high and we're going to make the body in Q2 and Q3. Because remember, we don't move in a straight line. A candle has the body and it has the wick like this. And so what we typically see sometimes when we make that one of the sides of the wicks, in this case here, we make the bottom wick, is we see that aggressive move in a direction first, in this case, direction to the downside, to make this bottom wick. So if you were to imagine the candle being formed, it would go down, go down, go down, and go boom, and start getting bought up, got bought up, got bought up, and then it closed back above here. That's your signal, okay? Signal. We're accepting prices above the 10 o'clock hour. And then the confirmation is in Q2. We take Q1 high, and now we know that we're most likely in the body of this daily candle, and we were watching the wick being formed, and now we get to take a part of a cash flow trade as the body gets created to make the wick to the upside, which will be in most likely Q3 to Q4. Dude, I want gifts so bad. Yeah, I wish YouTube gave you gifts. It'd been a lot more fun. Danny, you still Danny's like, dude, I want to see a firecracker. Trust me, we all do, bro. Trust me.
But the 05 is giving full signatures again. Like you swiped it and now we're back towards the high. So right now it's a game of which one's the Q1 high and low. But yeah, like this, when you see this is telling you DMP, DWP solid day, and that you are in the body of the daily candle. All right, that your job is to buy the dips. We might not have gotten the sell that we wanted, right? But it's telling you it doesn't need it. This is the live price saying we don't care about your 90%. We don't care about your 100% settlement. We don't care about that. We want to go higher, and that's what we're going to do. Doesn't mean it won't come back, but right now it's saying, hey, dude, like live price is saying, hit the bid. And you have to set the conditions to what that looks like.
I really like how small this 05 box is too.
Yes.
Kind of the same thing of the market open, guys. Like when the market open is decently sized like this, I can define risk pretty easy, meaning I can lose against the winning team really efficient. I can take 2 to 3 stop losses and still break even / make a net profit for the day because of how small this is. So in this case here, if this 05 is, it's only 0.9%, right? So or 0.8%. So if I wait for a break of some kind of the continuation to the upside, I know that I can define my risk very easy and get a cash flow position move off this. Or if we break to the downside, that's my signal. Maybe we form the upper wick to make a bearish 10 o'clock candle. We break through the mid of the previous hour right here. That's what this is. And then we get below market open. Or if I have a bearish distribution anywhere here, I will take a short or extended cash flow shorts to the downside towards these statistics. Because again, I can't reiterate this enough. We are bullish. Yes, this looks very good, but we are still within the time and price that this can be the high of day. And I'm letting live price can tell me if I'm right or wrong. And right now, the live price component is this 05 and the opening price of the 10 a.m. If we're going to make the lower wick here to go higher, most likely thinking of an if-then scenario. If we get back above the 10 a.m. open, then most likely we're going to get above the 05 box. And if we get above the 05 box, then most likely we're going to get back above the Q1 high and Q2. So all those if-then scenarios that stack up in my favor, I want to get in as early as possible to that if-then statement. So that way, if I'm correct, I can get a cash flow move off this 05 box as the Q2 and Q3 continues to the upside to make an in statistic high for Q3 to Q4. And then vice versa. If we break to the downside, I'm not taking a trade. I'm letting that be my confirmation and my signal to now seeing if this is going to be the reversal to get back below market open to then take extended cash flow shorts towards these towards these statistics to firecracker. So let us see. And the only thing that's going to get me into a short above market open by this point, because we have still a decent high of day, is a bearish entry aid. That's it.
Yep.
But we got to get below the 05.
Q2 has to take out Q1, right? Which it's looking like it's going to do, and this whole sweeper concept is a thing. Let's go. Dude, we're about to get it. Let's go. Come on. Need somebody to fast forward time to 10:15. I just jinxed the shit out of us.
All right, we're starting to try to body outside this 05. We got 3 seconds left.
Dude, I've been muted this whole time. I've been chit-chatting up a storm with you, man. I'm like, why is it blowing me off? Like, I'm short. Like 15 minis right here. Duh. I'm just kidding.
I'm muted. I'm short.
No, we're trying to see, like, this 05 breakout, is it weak enough to actually make it 10 handles below, 10 basis points below, right? Can we take out this low, right, in Q2, the next 15 minutes, right? Can it take out this 15-minute low and make it to these levels? And
all right, 15 seconds left, and this will be the first official close below the 05. That's our signal. That's our signal. Okay, now we need confirmation. Confirmation. I want to see how we test the previous hour mid. If we get bearish distribution, which is just this little red wolf.
Austin, can you hear me?
Yeah. What's up?
Oh, okay. No. I just wanted to make sure. I didn't know if my mic went out. Keep doing your thing, dude.
If we get these little red wolves right here, this just shows me bearish and bullish distribution of price. So we have to be below this 05. And why below this? Because this signifies, okay, this could be the Q1 high. And this is to us saying that this is most likely the wick of the 10 o'clock hour. And this could be the body. But we have to be below this 05. And then I'll wait for a bearish entry aid if we're still above market open. If we don't get any bearish entry aids, and I'll just wait for a close. If we suck back into the 05 like we're doing right now, and then in Q2 we come up and take the Q1 high, I'll be looking for a cash flow long right here.
All right, it's Q2. We went 10 handles out of the 05 box, so that's been checked off, right? Now what we're looking at is Like, do we get rejection out of this 15-minute footprint, or can we push right through it? Do we get rejection off the 50% right here, right? Or do we just push right through to the downside? Like, is it strong or is it weak? All right, we're getting some rejection to the upside. We weren't even weak enough to get to the previous hour 50% during the first 15 minutes of 10 o'clock is what it's telling you. And we're not strong enough to get back into the 05 box to the upside.
$30 seconds left. This will be the second candle closure below the 05 box. Again, this is our signal. Not a trade, but a signal to start paying attention. Market makers are stream sniping. Yeah, dude, I'm telling you, man. Patrick from Citadel, dude, he watches our streams. He's like, this is where I'm gonna trap retail stops. This is where I'm gonna trap the Chase Bank stops.
He's relative, so he's definitely messing with me, right? He's an Irish Mick, like I'm an Irish Mick, like he's like, listen, I'm gonna mess up Mickey today. Oh, he wants to live stream and look like a fool? Got you, Mickey.
One thing I do like about YouTube versus Discord is I can actually play background music and it sounds okay.
Oh, I don't even hear it.
Oh, you don't hear it?
I got my hearing aids in too.
It's like super, super low. Can you guys hear the music? Somebody let me know in the chat. Let's check in on. So if you guys want to see even more context into why we're so relaxed here. So these are the algorithms. So this is the market open break algorithm. This is the first time checking on it here today. So for cash flow movements, YM got stopped out and it's now in another short. Russell, same thing. Silver, about halfway to TP. Got about right here. Cash flow is right here. Copper, cash flow right here. TP hit. Natural gas, same thing. Right there. And Bitcoin, looks like Bitcoin got cash flow too. Nice.
All right, here we go.
Somebody turned on, what the?
Oh, I got music now.
Why is that so loud?
All right, we just took out Q1 low, so that 10 o'clock sweeper's in effect now. Like wolf in trades, all that for cash flowing target shorts are now on.
Yep. And we're at max distribution.
And we're getting a whoop and trade right now.
I turned it up the littlest amount so I can see if the chat could hear it, and they can hear it now. But somehow that sounded like a big turn up for you.
It flashed on my screen. It just disappeared because doing that now.
You must have the Patrick version. I didn't get any.
Oh no! Like it just flashed on this 1 minute candle.
All right. Oh, and look at that. We took Q1 low. So let me mark that here. Q1 low. This is it right here. Q1 low. All right. So what does this tell us? So now the signal is we got below the 05. So that signal, that short intent number 1, bearish intent number 1, bearish intent number 2 is just swiping like we did here, taking that Q1 low. Now another even icing on the cake will be bodying below, so a close, because now statistics tell us majority of the time, we're not predicting, just playing probabilities, majority of the time, this high is now going to be the high for the rest of this 10 o'clock candle. And so if this is going to be the high for the rest of the 10 o'clock candle, so Q1 high, this is most likely the wick of the hourly candle, and now we can say we're most likely in the body of the hourly candle. So now that I understand that I'm in the body of the hourly candle, I just need a bearish entry aid or some sort of entry drill. So it could be anything. I don't care how you guys trade. It could be a resistance rejection. It could be a fair value gap, an inverse fair value gap, a
breaker,
S-pills in here, a freaking EMA rejection, a breaker. It doesn't matter, right? It just any sort of
what it can't be,
drill.
What it cannot be, it absolutely cannot be a Chase Bank cloud strike, right? Seek and destroy inverse moon cycle. That's what we learned. What was that thing you were talking about yesterday with the correlation doesn't mean causation, going through that site?
Correlation versus causation.
Yeah, like that was pretty funny. Like looking at some of those.
I'm telling you guys, dude. We could do a whole segment on that. If we get into a trade here, I'll even break it down on stream. I'm kind of focused right now because we're almost.
Yeah, it keeps turtling.
Bearish distribution. It keeps turtling. Carl Hungus is short from 243. Enter the trader, S-pill. What did you guys say? What you guys saying in the chat here? I'm behind. Enter the trader is S-pill. I thought you were quoting S-pill. I got short too. Nice. Okay. So we got some people leaning towards the short side now. Just need confirmation. And this right here is a prime example too, I want to highlight, of different styles of trading. So you telling me the vanishing of pirates didn't cause the global warming? Yeah, hey, could be. I don't know. You literally made me speechless right there. But
this is
an example.
This is an example. Making that my phone screensaver.
I'll put it on the screen there. You go screenshot of different styles of trading. Okay, so you have confirmation style trading. The pro is you're getting in with a little bit more confirmation, so your win rate's going to be a little bit higher. The downside is you sacrifice trade location. Okay, so objectively, when you wait for confirmation, you're going to have some sort of a larger stop because you're waiting for that confirmation. The flip side of that, you have somebody. Oh, we got. Let me set up here. We got 10 seconds left. Bearish distribution. We got 5, 4, 3. All right, I'm taking this short.
Yep. It went away, but.
Oh, did it?
Yeah.
Oh, well. I'll take it.
Yeah, I'm already in. I'm 217 is TP. TP1, I can extend it a little bit lower.
I'm going to target 208.25 for 0.1%.
208. Yeah, that works.
And then stop will be at 05 high.
Nice. Yeah. I'm going to leave myself some room to add to this, right? My stop will be not this quarter, but the next quarter will be above this high right here, the 15-minute high, but we have to get the new 15-minute for me to place there. Right now it's above the 05 high.
There you go. You're sharing your screen now.
Yeah, so right here, the stop's located right here. In the new 15-minute, we'll go right here at this 05 low. And you can see a clean example when we enter the position, it goes instantly against us.
Well, got a little faked out there because we didn't get that full close, but
yeah,
I'm okay putting a little bit of risk on this. We've taken the Q1 low. We got below the 05. Be losing against the winning team with a Q2 low if
the firecrackers
back up.
The firecrackers out of my brain right now. Like, especially if I get stopped out on this, right? Like, I definitely don't know if the firecracker is going to happen, and that's okay. And this is the market punching you in the face if we do get stopped out. But
Yeah.
that's okay, because when somebody punches you in the face, you got two options. You can cry about it and get punched in the face again, or you can figure out where they're exposed at and punch them there. So if I get stopped out of this, yay, I'll go instant long. And then my risk will go below here. Like, I already am seeing the DMP, DWP style day to the upside, right? Because of the lack of swiping and being above P12 high and previous day high. So it's kind of a risky trade at this point in time anyway. If it was going to happen, it should have happened.
Yeah, I'm stopped out now.
Yep.
I'm going to keep the risk small on this.
Yep. And that's the name of the game
sometimes.
I'm still in. My stop is above this 10 o'clock high. But I definitely...
We're getting bullish distribution right here.
Yep.
So now I'm going to see. So now we got check number one. So obviously I was on the wrong side of this movement. We got bullish distribution at 1027. I want to see, do we now get above this 05 where we're going to be having an out of statistic hourly candle? But can I get a cash flow movement to the upside for this DMP-DW style movement that I'm looking for? Or if we get back to the downside, I've just paid a very small expense and I can get right back in with a bearish entry aid. So this is what I'm looking at now. Yeah, that was a dirty red wolf. The dirty little red wolf. I paid $225 for that trade, and somehow, so the trading gods did me a favor here. Somehow one of my accounts didn't get copy traded. So that business expense was even less across the entire portfolio. That's pretty funny. Vinay, what if ES is doing something different? Do you look at such correlations with other indices, or do you just focus on NASDAQ, honestly, Vinay? The thing is, right, like, is there going to be times where in NASDAQ or there's going to be an SMT or whatever that's going to do what? Yeah, but then there's also times that it doesn't. And so unless you have something that is 100% accurate, you're just adding an additional probability to your overall accuracy. And so you're adding one additional layer that really doesn't tell you if you need to or not. So it's because you see sometimes NASDAQ move different and opposite to ES. Sometimes you see it move just pretty cleanly. So
all right, I'm short. I'm adding to my short position, new 15-minute candle. Like, I can put my risk right here, right? Like, new 30-minute candle, right? Like,
oh, we're getting another bearish entry
up, right? And then, like, my stop is right here, and I'm out and stopped. Yay! I get fancy with it. Right, but the thought process was like, if this is just a 15-minute retracement of this, right? Bearish distribution for the hour can still be down. Add to the position, take my stop from here to here, same amount, right? So I'm down 420, which is a weird number.
Dude,
I don't
that
even know
was
what
a
happened.
crazy candle. Holy.
You know, it's the 1030 candle.
An instant 37 print candle.
Yep. All right, now she's telling you, like, stop messing around, right? Buy the heck and buy the dip. And this is the name of the game sometimes, folks. I don't really care if I got stopped out. I don't care if I'm in drawdown, because I know over the quarter, over the next, 1,000 days, 1,000 trades, like, this is my system works, and my job is to manage the risk as it happens.
Take deny my TP. Yeah, that's kind of funny because that short that we got right here, that was like halfway to 0.1%.
Yeah,
that's funny. Mm-hmm.
So that was the entry for the captain backtest long right here on the black screen, right? Like targeting 0.25 basis points, right? I usually wait for the 15-minute to give it, which we haven't confirmed it yet. But once we close above this high right here, I'll be looking for long entries off of that.
There we go. Look at that. So there's the trade we took. Stopped out for 220.
Dude, I like it because it said, hey, we're going to instantly stop you out. Right, that's a blessing. I don't like waiting in trades forever. I like being in and out. You're either right or you're wrong. So, yay.
Yes, sir.
And this is a long, true day. So expecting end of day, high day.
Yeah, I'm really just being patient now to see if we get a bullish entry aid. Get a bullish entry aid here with a clear close above the 05 and the Q1 high. And I'll be looking for a cash flow trade here. 10 to 11.
A weird stat for a long true, right? Long true's got the high of the day around 10:30 to 10:45.
All right, I'm going to try this short again. Got another close below 05. I'll try this for 0.11% here at 214. And then stop is going to be right here at 264.25. 213. Yeah. Give this one more attempt at a close below the 05 because now by Q3, we failed to even go back to the 05 high or even get above the Q1 open. So now statistically, we have a Q1 high right here at 10 o'clock. So if I get stopped out of this, I'm losing against the winning team. I'm saying, hey, we're going to come up and make a Q2 low, which we typically do not do in an hourly candle, and pay for a trade that is against what we typically do. Or I'm on the right side of this candle, even if we're bullish, even if we have a crazy uptrend, whatever, we still have a probability of now moving at least 0.1% out of this box to make the daily the body of this candle to take this Q2 low. And so now I'm just thinking if then. So if this Q2 low gets taken, then we're making a Q3 low. And if we make a Q3 low, then most likely I'm thinking we get back here to the previous hour mid, which is this level right here, which is exactly where my TP is parked at.
Dude, I've got to jump. I've got a meeting, but I do have a captain backtest for long, right? I'm just waiting for the 15-minute candle to confirm it. And right, that entry is allowed, right? Which means we have to have a close above the previous 15-minute candle, right? And then my risk plan will be below previous hour 50s or this hour's low, right? When I get the confirmation of entry, and then targeting 25 basis points to the top, wherever that might be. But that's the only other trade that I'll take today. But yeah,
cool, man.
It's been real. It's been fun. Thanks for listening to us. And listen, I'm going to end it with this, right? Like I can come on here every single Monday and miss moves, get stopped out, right? Whatever, right? Like, and still be profitable quarter over quarter, right? Because at the end of the day, it's about, are you sticking to your business plan? Are you sticking to your risk profile? Are you position sizing correctly to be able to sustain the drawdown that trade plan gives you, right? And that's what it's about. It's not if me and Austin look like YouTube all-stars or whether we look like YouTube retards, right? Like, it's about, it's about like, are you personally sticking to your business plan? Because at the end of the day, the object is to make money, and that's what we're here to do. So with that being said, I am going to jump, and thanks for having me on, bud.
Absolutely, dude. Appreciate you hanging out with me.
All right.
See you, dude.
Hit leave, right? Just hit leave?
Yeah, or you can just close down the tab. That'll work too.
Okay, I'll just exit out of the tab. And hopefully it doesn't shut everything down.
Nah, you should be good.
All right.
Don't click the end stream button. Clip it.
He doesn't even have access to the end stream button.
Oh, okay, cool. Yeah, guys. If y'all have any questions or anything, let me know. We're just chilling now. This is the easiest part of trading. Once you do all the work to kind of war game to build your trade, now you just let the trade play out, and whatever happens, happens. And exactly what Mickey was saying, like, the cool thing about what we do is, dude, you just stick to the process and the statistics, like repeating movements, repeating things. If you just include that into your trade plan, they're going to take care of that consistency part. You just have to execute. You have to execute and be a steward to your edge. Jim Simmons says it really nicely. He just says, be a slave to your edge. As uncomfortable as it looks to go short when we're in this super bullish uptrend movement, if my edge and my system tells me, okay, all things are now looking for at least a 0.1% short, I'm going to do that. No shame in getting stopped out, taking a business expense. You have to have that ability to let your stop loss do the worrying for you. Smitty, are you in here? I make a bagel and pow. Yeah, that was a crazy candle. Which it kind of, I like that we made that candle, that wick in Q, like at the opening of Q3 here, because again, this kind of furthers my point, right? If we're going to statistically make a Q1 high, then what I want to see, so I remove this real quick. So this is for typically what we do in an hourly candle, right? This is an out of statistic hourly low. Typically, if we're going to do the Q1 high, then we're due for a new low in Q3 to Q4. And so you can kind of see here, if this low gets taken, then most likely we're due for a low in Q4. And so what I try to do as a cash flow style trader is I try to design a trade with an exit plan with like if my overall intended direction is, let's say here, can I get a portion towards this overall movement? Because a lot of the times, a lot of people, they'll target a specific move and they'll get tick denied, right? If you target a low, let's say you target this low and this low is your TP, something like this happens, right? So I trade to get a portion of what an overall move is going to provide. If what my idea is giving me an overall movement, let's say back to market open, well, how can I get just a piece of this move towards market open? All right, we're getting bullish distribution here at this 1041 candle. Stops me out. It stops me out. False time dropping off. Yep. We're also in that final time. It's like the final countdown for us to go false, which to get back all the way below market open by this point, I don't really have that much of an expectation, Danny. And again, just to kind of give you guys more context with this trade, it's mostly just an hourly trade, right? I'm just trying to take advantage of the fact that we're now due for a new low in this hour, and also a potential retest of the previous hour mid. Because if my stop loss gets hit up here, we're making a weird hourly candle. We're making a Q2 low with a Q4 high. What is the animal you respect the most and why? That's a different question. What animal do I respect? I mean, I don't know. It's a deep question. I don't know. Couldn't even tell you, to be honest. Maybe a wolf, since that's what the pack trade group is about, right? It's wolves, stronger and stronger together. Maybe that's it. Their loyalty. I think loyalty is something that's a virtue nowadays with how the world is. We're getting bullish distribution. We got 30 seconds left on this candle. The guy that created the wolf pack is yeah. See, you already know. I'd say wolf. Yeah. All right, we got 6 seconds left on this bullish distribution. If we close with this bullish entry rate, I will limit my expense, and we do. So I'm going to close out of this trade. That is bullish intention for me, which further invalidates the trade. So I paid just a little bit less than what I was budgeting for. Keeps my expenses low, which is another example of when I tell you guys I use stop losses sometimes a little bit bigger than what some people like to see. I'd say 5 times out of 10, the full stop loss gets hit before an invalidation like that occurs. So we get bullish distribution here. So now I want to move into the next hour. I'm going to give myself one more opportunity. And if it's just going to be a day like this where I can't get anything, so be it. So we're going to be looking at this final quarter. So if I break apart the 10 o'clock hourly candle once more. So we're now having a Q2 low. We do not typically make a Q2 low with a Q3 potential high or a Q4 potential high, because we don't typically make a Q1 high and a Q2 low. So if we move sideways in this 10 o'clock hour, then I'll be moving to the 11 o'clock hour. And we'll be looking at seeing if we can take a continuation trade higher off the 11 o'clock, or if this high of day holds. And now we start looking for shorts again on the 11 o'clock hour. Do a quick pulse check in the chat. How are you guys doing this morning? You guys seeing the market clearly this morning? Are you seeing it a little fuzzy? Doing good? You already done for the day? You locked yourself out already? How'd you guys do? I died. No trade for me. One trade in London, up 120 and waiting now for a clear long. Yeah. Good job. Good trade. Good job, Thor. No trades today, Wagner. Done for the day, Brooke. Nice. Just done for the day, about break even. Good night. Hey, have a good night, Shiitake. I'm down a little. Yeah. Small paper cut day so far from me. Y'all know what I'm already going to say, though. Y'all know what I'm already going to say. Oh, camera died, so we got to... No more camera for the session. That was the battery. But you guys know what I'm going to say. I say it all the time. This is why we stream live like this, so you guys get to see the reality of trading. This is the reality of trading. You're not going to have every day super clear. You just manage risk. Fuzzy day, closing red, reset tomorrow. That's all right. Reset your edge. Nothing wrong with that. And here's a perfect example. You guys actually just seen that in real time too. Managing a trade to take a little bit of less of an expense to pay for it. So this bullish entry aid right here, this told me, hey man, there's objective bullish distribution coming in and you're short. So my stop loss was actually right here at I think it was like what, 262, somewhere around here. And so I would have had to have paid more for this trade versus just cut the trade. Take good trades. So we're coming back. We're coming back in Q4. Still due for a new low in this 15-minute candle. All right, I'm going to take this one more time. One more time for this hourly candle for a potential Q4 low. 215.25. I'm going to put my risk here. .12. And then it's going to be the Q1 high, 265. 265 right there. Genuinely not upset. Drez is positive 60K for the day. One of the reasons it could be fuzzy is we get too married to what we decided we were seeing. Let the chart tell you the truth, married. Yeah, that's it. That's it, dude. telling you guys, a lot of the major problems you will find that's deep rooted into trading is just being scared to be wrong. I mean, that's the name of this entire game, is let your stop loss do the worrying, let what your edge or whatever you're trying to look for, let that be why you get into the trade, and that's it. Slave to your process. Right now, my process says there is still merit to this 10 o'clock high. I am perfectly fine looking like a complete idiot and saying, hey, I can't get a single trade to save my life here. This is my time to lock it up. But there is still something to be said to the fact that we still cannot hold and take this high with this out of stat hourly low here coming in on the last portion of this Q4. And so now going into the 10 o'clock or the 11 o'clock hour, let's say I stay in this trade going into the 11 o'clock hour. If we start breaking above the 05 of 11 o'clock, I can cut my expense, say, all right, just business expense type of day. Or if we get back to the downside and we stay below the 11 o'clock 05, I can continue holding this trade for 0.12%. Oh my God. Y'all crack me up, man. No trades for me today, being patient. All right. Cool stuff, Dale. Running out of distro. I'm just going to wait. Yeah. It's been kind of a weird day, man. Obviously, we're moving a lot more potential directional to the upside. Again, this trade was just a potential cash flow trade to make the wick of the hourly candle here. So we're going to go ahead and pay a lot less for this trade. because we're moving into the final minutes of the hour. Doesn't look like we're going to be getting all the way down here to 2:15 by the final 3-4 minutes of this hourly candle. So we are going to be moving into the next hour and seeing if we get a continuation of this candle for the 11 o'clock hour for a DMP, DWP type of scenario, or a range 2 type of scenario back to market open. Some days I should just fade my, because you're worried about winning every single trade still, Shag. We've been over this hundreds of times. You guys just watch me take 3 losses here with all 3 trades instant drawdown. Not a single one of these trades went a little bit in my favor. And there's still trades I would have taken every single day of the week. I would never fade myself. Oh, finally getting a bullish entry aid here. Final one to close the hour. Oh my God. Dude. Instant 20-point candle. Moving into the next hour. Q1 open. Turn on trend mode. What do we got? I'm sure it looks freaking beautiful here. Buy the dip, entry. That's disgusting. Time is everything. MNQ making all-time high, 8 points higher. They won't accept that SMT. What are you talking about? Oh, MNQ, yeah, making different highs than NQ, yeah. That's funny. See you later, Pocket. All right, we got 30 seconds left on this 1 minute candle. We're trying to break below the 05 box. I want to see how we close. Five seconds left. All right, I'm taking this short. Target 0.12% here at 226.25. And then my stop will be the 05 box at 278. Right there. That'll be the trade. Context behind this trade, we break below the 05 within the first 5 to 10 minutes here of the hourly candle. We did make a new high, sweeping the 10 o'clock high. We're still, okay, I know how bullish we look. I know, I get it. But still, we are in the time to potentially make this 11 o'clock high for a retest of even at a bare minimum the previous hour's mids. So this trade is a cash flow trade for a potential hourly candle. I'm going to give myself 2 trades in this hour, and then it's going to be done. So if I can't get, in this case here, 30 points off this trade, if I can't get a movement in this 11 o'clock hour to the downside and I get stopped on the other side, I'm going to give myself one more shot to trade this 11 o'clock hourly candle. And if I'm not seeing it, if it's an invalid day, I'm going to pay for this day and move on to tomorrow. Did you already give an account? What are the details? No, I haven't done it yet, Danny. I was just wanting to get my trading done first. Austin's copy trading PTFA. Are you guys in a trade? Hey, if you guys are taking trades or anything, please feel free to shout them out. Let's see, from a footprint standpoint, right now we're in the previous hour's footprint. Yeah, this is a trade that I'm either going to lose against the winning team on, or I feel pretty good that we're on the right side for a potential retracement at a minimum of creating the body of this 11 o'clock hourly candle. You know, I want to be a part of how we create this body. So either we're going to make the body of this hourly candle retesting the 10 o'clock previous hour right here at 212, or if I'm losing against the winning team. So if we come back up here and take this high, we're now exchanging in, a hive day for another Addistat hive day, most likely DMPDWP, get on the long side here with a break above the 05, stop below the other side of 05 with a Q1 low and potential Q3 to Q4 high. So there's still 2 little trade opportunities I'm looking for. Either a cash flow trade off the 05 to the downside here, or I get stopped, cash flow trade to the upside, and then I'm calling it a day. And if I get stopped on both, dude, you guys have seen, I can't be more transparent than this. I try to show you guys I lose just like anybody else. I pay for expenses just like anybody else. And this would be 1, 2, 3, 4. It's about my 4th trade. We know you're short, Shag. What up, Drez? Drez, are we long? Are we short? What are we doing? Give me a Drez signal. My signals aren't working. I'm only short in the NBA. Same. Oh, you're long? We shall see. Sometimes we're on the opposite side of each other. Forgive Drez, he's new here. This is definitely a risky, like I've been trading on obviously the counter of the trend this entire time. So I've definitely taken the riskier trades of the day, but that's what I see. Two hourly doji candles. Yeah, and that's another reason too, Vladlin. Like, one thing that I really find interesting in statistics is the mean reversion of statistics. So like in this case here, we did an out of statistic hourly candle. We made a low in Q2 and a high in Q4. We don't typically do that. So now I would be even more shocked if the 11 o'clock hour fell out of what it typically does, right? Because we've already had 1 hour now fall off track, do the minority. I would be anticipating this 11 o'clock hour to follow suit. So with this short that I'm currently in, if we come down here and take this Q1 low, I'm even more confident that at a minimum, we could potentially be watching the body of the candle be created in Q2 to Q3. And then vice versa. That's another reason I'm giving myself a little bit more budget for if I am wrong and I'm on the wrong side of the trade, because I can then take the long to the upside, taking the Q1 high. 05 breakout, got to take it. Yeah. That's what I see as well. And guess what, Vladlin? We could be wrong or we could be right. But thanks to risk management, we can wake up tomorrow and do it all over again. QR code expired? What? Let me see. Let me scan it, see what it says. Oh, it's not even popping up. I'm trying to get the QR code to scan. It's not scanning. Let me pull up the stream. That's funny. All right. Well, I guess I got to fix that. Thanks for letting me know, man. If you click the description of this live stream, there's an actual link. I'm not sure why the QR code's messing up. I did a non-expiration or non-expired link, so I'm not sure what that is. But if you click the description of the live stream, go into the Discord. You can join the Discord that way. The boot camp is on the top left corner there, David. You can join the Discord. Discord's free. We do free Monday streams on Monday, and then we're going to be starting on Fridays doing a wargaming session. So from 8:20 to about 9:15, we'll be planning out our day. So you can tune in for that. But the boot camp is $100 for 3 months. I don't see Discord link in bio, only shows indicated. What? No, it's right there. I'm looking at it right here. Look. Right here. Join my Discord. Copy that link and paste it into your URL. But the boot camp is $100 for 3 months. We tell everybody, please just take that 3 months and really ingest it and understand it. Don't waste your time trying to sit and make money. If you're still trying to find profitability, you're operating a business that's not profitable. So put that business on hold and learn. That's what we ask everybody. So the reason why it's 3 months is we take our time and walk you guys through everything. So if you want to join, the next boot camp is October 18th. Then we live trade Monday through Friday in the pack trade group. So just like how you see us trading here today, we do that Tuesday through Friday as well, but it's in the pack. So to join the pack, you have to graduate the boot camp so you know and understand what we're doing. So the boot camp is a prerequisite that you have to get through before joining the pack trade group. Joining the pack trade group, you get continuation access to all the tools that we use and the live streams that we do to live trade. We trade. We have live trade sessions in London. We have live trade sessions in pre-New York with you see Drez in the chat, Carl and Eldianis. And then we have live trade sessions with myself and Mickey from 8:20 a.m. to around this time. This is actually kind of a little bit of a longer live trade session than what we typically do. And then we have mid-morning to noon live trade sessions here soon coming with Cody and PTFX. Shout out to them. And then we have a PM live trade session with Pocket Aces. You see him in the chat there. And then we do free re-engineering sessions. So we are, from the moment the market opens to the moment the market closes, we are active in the Discord in some way, shape, or form. And that's what we do, bro. Oh, and you're good, David. Yeah, might be just YouTube being YouTube. There you go. Danny's got you a link too. Thanks for letting me know, though. I wouldn't have known, so that's weird. I'll have to get that fixed. Pocket, are you still here? Can you add that to your list today at some point to get done? Get me a QR code that has a non-expired link to the Discord without all the background stuff, so I can just put it over top of that overlay on Canva. Short is nice. I'm in as well. Nice. Cool. One thing we talk about here, David, I'm not sure how familiar you are with what we do or how we trade. We trade with statistics and probabilities. We stick to a process. We don't care about a singular trade outcome. We don't care about this could completely lose, and it is what it is. It's the market. But when you trade with statistics that have consistency, so a statistic that you see me using right here that we're trading, statistically, we are due, if we make a high in Q1, we're due for a low in Q3 to Q4. We failed to do that in the 10 o'clock hour. So now I'm putting even more pressure on the fact that we could potentially do that in the 11 o'clock hour. So now that we took this Q1 low, so let me highlight that here. Q1 low. All right. So Q1 low, if we're due statistically to make a high here, and now that we took the low, we kind of basically eliminated half the test, right? If like you were having a multiple choice test, well, you've basically eliminated 2 of the answers, right? And so now we have to work with, we're due for a new low statistically in Q3 to Q4. So now what does statistics do for us from a manual trading standpoint? Well, number one, it gives you peace on the charts. It gives you confidence with objective numbers. I can take this trade still taking losing trades, and not be deterred of just repeating my process and doing it over and over and over and over and over again. And if it's a business expense day, it's a business expense day. Everybody in the world has red days, and if they tell you they don't, they're full of shit. So if I know that statistically we are due to make a low in Q3 to Q4, I can watch price come back to my entry. I can watch price put me into drawdown. I can do whatever, and I don't have to freak out. I don't have to overmanage the trade. I don't have to close early. I don't have to do anything. I don't have to put stops to break even. I don't have to do none of that, because I know that statistically, if we pull back here in Q2 and then we set ourselves up for making an out of statistic low here. So let's take that this Q2 low is an out of statistic low for this hourly candle. I now know that we could be setting up for Q3 to come and take this low and keep on going. Or I'm on the wrong side of the trade and my stop loss does the worrying. My stop loss allows me to be wrong. Too many people look at this market as if every single trade they have to take is the most perfect and correct one. I don't look at it that way, and neither is what we do here. We look at it as a law of large numbers and a series of probabilities. And the law of large numbers tells us if we stick to something that is statistically significant 60 to 70% of the time, then we're due to have some sort of consistency. We just have to be a slave to the edge. And then that's what we do every single day. Red, green, flat. David, I've been following you on X and really like this style of trading. No bull, just straight up numbers and stats, which is, yeah. The main thing, David, honestly, is the biggest thing that annoyed me and what kind of sent me down the rabbit hole of statistics in the first place is people would tell me, hey man, trust me, this works. Hey man, this happens. Hey man, this is a high probability time. Hey man, this is a low probability environment. Hey man, this is this is that, this is this is that. Everybody would be talking in high probability, or this is a high quality setup. But to make something probable, to make something of quality, you need numbers to tell you what is and what isn't quality. And so if somebody tells you, hey, this is a high probable setup, and they don't have a series of data that they can show you to say this is high probability because out of X percent this happens, then what are they determining that probability of? Recency bias? Like I can't determine a probability without some sort of data to back it up. So that's what led me down the rabbit hole of statistics. And I find confidence in numbers. I find confidence in the fact that I can measure something happening more than not. And then I just have to structure risk around that event happening more often than not. In fact, all kinds of time frames can be broken into quarters and they follow. Yeah, same idea. Love futures, no expiration of time, decay. We have the luxury to sit in. Yeah. Yeah, you try to do this in options, theta decay will destroy you. What is the Q1, which determines Q? Whatever time horizon you're looking for, David. So if it's an hourly candle, you split an hourly candle into 4 pieces. That's 60 divided by 4, right? 6. So 15 minutes. Every 15 minutes is a quarter of an hour. So then the Q1 high and the Q1 low would be the high and low of the first 15-minute candle in the hour. Right here. Q1 is breaking the hour into 4. Yep, exactly, M-Dub. And it's 11:28. I'm trying to extend this stream out to show you guys the true start and end of all the trades. We do a PM trade session at around noonish with Pocket, and so I'll definitely be closing up shop by noon. But I'm trying to extend this session out as much as possible, so you guys get to see transparently. You get to see all the trades. I thought just making sure I understood how you. Yep. Yeah, Q1 can be anything. If you look at my chart here, like, I mean, Q1 could be. So the Q1 of New York is from 6 to 8:30. This is the first hour or the first quarter of the rest of the day. So if you split the daily candle in half, you split the hourly candle or the daily candle in half here. The first half is from 6 from 1800 to 6 a.m. Second half is from 1600. So this is the Q1 high, this is Q1 low. So right now, we took the high in Q1 and we haven't looked back. And so overall, the day is bullish. The overall day, and anybody that would say we're bullish, you'd be correct. But as a intraday trader like I am, and I'm just trying to look for a cash flow move, there is still plenty of reason and plenty of probabilities that, okay, well, now that we made this up move, what's the statistic of the down move? So even though everybody's trying to find longs, and you wouldn't be wrong to do so, in this example here, I'm trying to take advantage of the fact that now we've locked in a high for this hourly candle and also potentially even the day if we respect that 11 o'clock high, and then a retracement back into market open. And so now as a cash flow driven trader, I'm just trying to get a portion to the overall intended direction. If my overall intended direction is market open with at the least this 10 o'clock or the 9 o'clock mid right here, then I'm trying to get just a piece of this movement, which is 0.12%. And then you can also see my gunship indicator. This is something the pack has. It shows probable price movement, so MFEs, max favorable excursion. And you can see we set up here for these green lines. So we have MFEs telling us that if we're on the right side of this trade, if we're on the right side of the market, the current market condition at this specific time gets us at median to these green lines right here. And so now either I'm wrong and the winning team gets to go on to the championship, or I'm right and I'm on the right side of historically what we typically do. I'm starting to fall asleep. Yeah. Dude, this has been a slow session, man. This has been a wonky session for sure. Do you follow Futures Man on X? I saw he'd interact with you and I've liked his stats he posts. Not sure if he's in your disc. Futures Man. I'm not sure. I'd probably have to see. I talk to so many people, dude. Maybe I might. I don't. It doesn't ring a bell. It's not somebody that I just noticed right off the bat. But I don't know. Could be. There's a lot of people on X that use statistics and stuff too, just a little different ways. Dude, this is like the longest stream we've had for a while. Probably like in a month. Oh my Lord. I'll probably cut the stream off here at the final end of this quarter here of Q3. So I'll let us go for one more quarter of this hour. Then I gotta call it quits. I got too much stuff on my plate today. Getting smacked around with NQ here. Trading's boring, bro. This is why, honestly, this is the part of the streaming that I really don't enjoy is, you know, when you stream, you naturally got to sit here and watch your trade. But practicality wise, I don't really care about watching the trade. Once I click the trade, I'm next trade, on to the next trade. It is what it is. So it's like, yeah, it kind of sucks like just sitting here mind-numbingly watching the chart, because that's another thing that I just don't really enjoy about trading is watching. Because there's nothing you can do at that point. All right, we're getting bullish distribution right here. If we get a close of bullish distribution, I'm going to call it, pay even less for the trade, and just call it a day. Can't get anything. Got 30 seconds left here. This is my rules to manage the risk here. So bullish distribution closes, objectively bullish, invalidates my idea of shorts. So we got 15 seconds left on this candle. All right, close bullish. That's the trades. Is what it is, business expense day. But this is why we trade live. I show you guys the realities of everything, right? Like this is just, this is it. So hope you guys have a wonderful rest of your day. Days like today, you got to just step away from the computer, step away from the charts. Can't force your will on the market. You're just going to take trades and take good trades and reset your edge tomorrow. So you guys have a wonderful rest of your day. As always, stay grinding on your goals and never, ever, ever let anybody tell you that you can't do something they never done themselves. And I'll talk to y'all later. Bye, everybody.